Mike.
International economics and policy correspondent for Bloomberg News, joining us here in our Bloomberg Interactive Broker Studio. The S&P 500 off 1.3%, the NASDAQ off 2.2%. We'll have more coming up. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. We do check markets all day long here at Bloomberg. We are just about at the lows of the morning for the Dow, the S&P, and the NASDAQ Composite Index. Right now, we have got the S&P slumping by 80 points at 54.23, a drop today of 1.5%. We've got the Dow Jones Industrial Average down 334 points, down 0.8%. NASDAQ down 387 points for the NASDAQ Composite Index, a drop right now of 2.3%. On this Jobs Friday, the 10-year 3.68, the 2-year 3.66%. Gold down $6 the ounce, 25.10 right now on the precious metal. Gold down 0.3%, and West Texas Intermediate crude down 1.8%, 67.88 for a barrel of WTI. Federal Reserve Governor Christopher Waller says it is important for the U.S. Central Bank to begin cutting rates this month amid rising risks of further weakening in the labor market. August did mark another month of sluggish job growth, and with that story, here's Bloomberg's Vinny Del Giudice.
U.S. payrolls rose by just 142,000 last month. Job losses in manufacturing, retail, and information technology weighed on the tally. Americans working part-time for economic reasons rose to the highest since 2021. Hiring was concentrated in leisure and hospitality, construction, and healthcare. The U.S. unemployment rate dipped to 4.2% in August after setting a three-year high in July. Vinny Del Giudice, Bloomberg Radio.
Bolero shares, they're up now by 5.3%. The operator of bowling centers reported revenue for the fourth quarter that came in above the average analyst estimate. Monday will be a big day for Apple. Apple's most important event of the year will take place when the company rolls out its latest iPhones. Again, recapping, stocks are trading lower. The S&P down 1.5%, 10-year 3.68%, the 2-year 3.66%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pell, thank you very much. I'm Alex Steele here alongside Paul Sweeney. This is Bloomberg Intelligence Radio. Happy Friday, everybody. We cover all the news that you need in business, economics, and finance through our lens of our Bloomberg Intelligence folks. They cover 2,000 companies and 130 industries all around the world. And we also tap our expertise outside of Bloomberg Intelligence as well. And for that, we go to Lindsay Piesga. She is chief economist over at Stifel to talk about the jobs report. Okay, so we get the jobs number. Then a couple hours later, we get Chris Waller coming out and talking about the current batch of data requires action, and if appropriate, he will advocate for front-loading cuts. What does if appropriate mean to front-load cuts for a 50 basis point cut in September?
Well, I think that means that if we see a material weakening in the employment data, if we see a material weakening in the inflation data, the Fed is poised to take a more aggressive stance. That being said, the lack of meaningful downward momentum that we've seen in price pressures, coupled with still a somewhat benign employment report. Remember, we saw that downtick in the unemployment rate, stronger wage gains. So it doesn't seem that at this point, to use Waller's characterization, it is appropriate to result in a more aggressive policy response. And as such, I think the Fed is going to take a more tempered approach until we see a more clear indication of weakness as opposed to just normalization in the economy.
All right, somebody comes up to you at a Starbucks this weekend and says, Lindsay, how's that labor market? How would you respond?
Well, I think right now we're still seeing solid conditions in the labor market. Now, certainly, we have lost momentum from earlier peak levels. Top-line hiring has slowed, but let's put the unemployment rate in perspective. It's still on a relatively low basis. Wage gains are still solid. Jobless claims continue to tick down. So there's still indications, again, that the labor market, yes, is cooling, losing momentum, but more to the prospect of normalizing as opposed to indications of outright weakness, suggesting that the Fed needs to take expedited or more aggressive action to help supplement or stabilize labor market conditions.
Actually, that happened to Michael McKee. He was on a train, and someone, like, random guy was like, hey, Mike, what do we get from the Fed? So, Lindsay, is the Fed going to go 25 or 50? And I guess the better question is, how much do you care about that versus us still pricing in 240 basis points of cuts in the next, 14, 15 months?
Well, I think the Fed is going to take, again, a slow and tempered pace. I think out of the gate, 25 basis points is appropriate. And the Fed has been very clear they're not on a predetermined pathway. And should we see the data come in better than expected or weaker than expected, the next policy response will reflect that data. And so that's going to really be the driver of how the Fed responds over the next year or 2 years in terms of slowly returning us more to a normal position in policy, as opposed to taking an aggressive approach and reversing us to neutral or well below.
So, Lindsay, when you put this labor data together, that I guess for me, one of the next questions is, how does that frame out how our U.S. consumer is doing? What's your view there?
Well, I think the U.S. consumer is struggling at this point. The U.S. consumer feels the weight of these higher prices, feels the weight of a slowing economy, but the consumer is still holding its own. It's still spending out in the marketplace, and it's still the backbone of the U.S. economy.
Aw, we love that. We love crying babies in the background. That's super cool. You can definitely bring them on air. We love that for you and for us. So I guess when we talk about how the data will evolve, what are we going to really be looking at? Is CPI really that important next week? Or is it just like, let's get past this 25 or 50 or whatever, and then we see how the labor market evolves?
I think the CPI, the PPI are key data points that are really going to determine the trajectory of the Fed's pathway for rates.
All right, Lindsay, thank you so much. We appreciate it. Lindsay Bieg's a chief economist for Stifel. She joined us on a Zoom from Chicago. She can do it all. She can talk economics, and she can then go take care of the little ones.
I mean,
that's
yeah.
How you. That's why you guys are the best. I don't know how you do it.
That was like COVID broadcasting with
Yes.
my daughter right by my side. That was super fun. I guess I'm just really questioning sort of what we're really going to learn in the next like week and a half. That's going to be a game changer for us. I mean, we're not seeing 50 basis points priced in when it comes to WIRP. We're still looking at around like 31 basis points for that first cut in September, but we're still pricing out a very significant cutting cycle. I was interested in the last hour. We were talking that usually from peak to trough, it's 17 cuts.
Wow.
I was like, wow, that's a lot. Like, so if we're looking at 10 or 12, that's actually not that much in comparison to normal cutting cycles. Anyway, I thought that was quite interesting also.
I don't know really the cadence of how the Fed will move in terms of cutting rates. Do you do it every meeting? Do you do it every other meeting? Do you wait for data to inform your decision? Do you front end? Do you go 25, 50 every meeting just to get it done? So it'll be interesting to see kind of the cadence and the strategy that they employ as they attempt to bring rates more to the neutral level here. But the market's certainly not liking it, what they see. And I guess it's a lot of people saying, hey, we've had a nice rip in this market. I'm not going home with any risk on the table.
Yeah, fair enough. Well, I mean, to your point of did they do 25 and then wait? That's what the ECB's done. 25, wait a little bit. Expectation is they're going to cut this week as well, maybe do it and then wait a little bit. But it feels like the Fed has been on a different track that once they start, they're going to keep on doing it. So that's when the trigger point got sort of pushed back a little bit over the last few years. Now I wonder, now what do we focus on? So we're done with jobs.
Yeah, I was just looking at the Broadcom story on the Bloomberg Terminal stock trading off. I mean, one of the risks, as one of our guests said today, we got to get back to focusing on earnings here. And one of the concerns is the tech spending or the AI spending, is that kind of pausing for a little bit, going to slow down? And if so, what does that mean for the market? Because if you think about the equity returns we've had in 2023 and in 2024, greatly influenced by that AI boom there. So I think to the extent that there's a perception that maybe that's slowing, and maybe you look at the Broadcom numbers today, their AI tech spending
it's really good.
was very good. It's just everything else was a little bit weaker.
Yep.
And is that a sign that people are just kind of pulling back on their tech spend?
Projecting $12 billion of revenue from AI-related products for the full year. That was a lot higher than estimated. But they make so many things. Mainframe products, security data center software, mobile phone chips, data storage gear. Even if you've troughed, doesn't necessarily mean that you're going to see any kind of real climb or rally. The CEO did say that its non-AI chip businesses are at or through their worst point. Okay, sure. I was hearing that about ISM manufacturing for like 7 months. So it doesn't mean necessarily it'll wind up getting a lot better. Broadcom stock is up, I bet, almost 10% at this point.
Yep. WTI crude oil off 2% right now, $1.40. We're now $67.75 per $67.75 per barrel there. And we're going to see that at the pump. I just refilled.
Below $3?
No, $3.15. We're getting there. We're getting there. This is Bloomberg.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Friday, everybody. Alex Steele here alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We are broadcasting to you live from Interactive Broker Studio right here in Midtown Manhattan. One of the interesting stories across the Bloomberg terminal is the economic plans are kind of rolling out for former President Trump and Vice President Kamala Harris. And one area where we're really looking at is the no tax on tips. Now, just to say, I used to work in a restaurant.
Yep.
Worked in a restaurant for 8 or 9 years. I don't report my tips.
Does anybody?
No. I mean, here's the thing. If you're at a restaurant where you pool all your tips and then you distribute it through checks, then you have to report your tips because it's through the official systems. Right, but if you're like doling out cash to each other and you're pooling it and you're taking it home, like maybe you report some of it, but come on, what is that about?
Exactly.
This was a long time ago, guys, so no one can come after me for it. Well, Laura Davidson is Bloomberg Politics editor, and she joins us now. So, but clearly, no tax on tips sounds real good and everyone likes it.
Yeah, about 70% of people, in our most recent Bloomberg Morning Consult poll say they like this idea. Both Harris and Trump have endorsed it. They have slightly different versions, but both voters say they like this idea. This is something that, not surprisingly, Harris and Trump both rolled out in Las Vegas, which is very much a service economy, casinos, hotels. This is one of those ideas that's clearly targeted to get voters. Economists, on the other hand, are not big fans of it.
In Vegas, okay, here's the rule in Vegas. You just have to tip well
Totally.
to everybody. It's good karma. You don't want to bring any bad karma to the table. So the door guy, the guy parks your car, the door guy, and waitress,
I mean, all the
thing.
stuff's free, so you got to tip. That's the jam. So
Laura,
let's pretend like they actually do pay taxes on tips.
Okay,
Yeah.
we'll do that. And Laura, probably the next big data point for this election, maybe one of the biggest ones between now and Election Day, is going to be the debate here. Can you give us the latest reporting on what we can expect from this debate?
Yeah, so this debate will be on Tuesday in Philadelphia. There will be no live audience. It will just be Harris and Trump on stage and the moderators from ABC asking them questions. Both campaigns are preparing for this, though in very different ways. Harris is in Pittsburgh right now. She's working having closed door meetings with her staff, working through debate prep. She is the person who really likes to, come in very prepared. She's a former prosecutor. She likes to dig in deep in the policy. Trump, on the other hand, does not like, doing these rehearsed mock debates. He doesn't like to have sort of formal debate prep. He views things like his speech at the New York Economic Club last week as sort of kind of versions of debate, getting out there, talking to people, trying out different lines and seeing what lands.
Do we think that we're going to see a Kamala Harris that is aggressive and attacking, or do we think it's going to be a more measured Kamala Harris that we've seen since she took the nomination?
That is really what remains to be seen. She is, very tested in, things like congressional hearings and, in a courtroom of, asking very pointed questions, landing those lines of attacks, trying to get, the jury or the audience on her side. But she's also mindful of not, letting Trump speak. And, he's been attacking her, and some of these things when it comes to race and gender, she's letting those go and saying, look, this is not an issue that I want to get in. I want to talk about policy. I want to talk about democracy and not these personal things.
Laura, is there a feeling in Washington of which candidate has more to gain or lose by this debate?
Really, this is sort of Harris's moment. This will be the largest audience she's probably ever had, and she is the lesser known of the two people that will be on stage. People know Trump; they've seen him now for 3 presidential cycles. They've seen him debate before, so this is really her chance to get out there with probably what will be the largest audience until Election Day.
When we go back to sort of the tax information that we've gotten over the last couple of days, I'm sure that's going to be a big header when it comes to the debate. What other policies are people into or iffy on? People, not corporations.
Yeah, so both campaigns have been relatively light on some of the policy details compared to what we've seen in the past from campaigns. They're putting out some of these broad strokes ideas, very broadly, lower taxes on households, higher taxes in the case of Harris on corporations and, investors. Trump has said he wants to lower those taxes. They talk about things like the border. They've been talking about housing, but not the details. This is, really Trump style. We've never seen, really in-depth policy papers from him. With Harris, part of this is she has a very very short campaign, and so they are just, sort of hacking off little bits as they can. But also a little bit of strategic ambiguity here is, helpful for her, and that this allows her to sort of, appeal to multiple, different constituencies that might not totally agree on certain policies, but if you don't fill in all the details, there's less to complain about.
Is this going to be the only debate, Laura, or do we know if there will be others?
Right now, this is the only debate that is scheduled for Harris and Trump. There is a VP debate, so we will see Walz and Vance on October 1st. Trump has talked about wanting additional debates, but it's not yet clear if that'll happen. He's really leaned into the idea of having one on Fox News. The Harris campaign has said, nope, that's not happening, but maybe we could discuss other networks.
What do we think there? How do you think the spin's going to go from the jobs report today, market reaction, into the debate?
So Trump is already out there. He has a press conference that's ongoing right now where he's talking about that these are horrible, horrible numbers. This is the real challenge here is for Harris to navigate this line of saying, look, yes, she is in the White House. She is in power right now, but not owning some of this, some of the bad news issues and, focusing on her plan looking forward or holding on to specific pieces of the Biden agenda that are more positive and resonate more with voters.
All right, Laura, really appreciate it. Thank you so much. Laura Davison, very busy, Bloomberg political editor, joining us there. But it's a fun piece, and it really kind of goes into what everyday people are going to be looking like in terms of tax policy, housing, child tax credit. It's voters love no tax on tips, but split over the $25,000 housing help at the end of the day. Okay, well, we got through this then, didn't we?
Absolutely.
Got through Jobs Friday. It's ugly out there, though.
It is. We got the S&P 500 off 87 points, 1.6%.
Yep, NASDAQ really taking it on the chin there. Volume also relatively healthy, I should say. And the bid into the bond market continues. Balance of Power with Joe Matthew is up next. This is Bloomberg.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
60 days to the election, but the first early ballots go out today. Welcome to the fastest show in politics, as some voters start making decisions now based in part on current economic conditions. And we have a lot to talk about in that area with the August jobs report impacting from Washington to Wall Street. We'll get more on the data from Stuart Paul at Bloomberg Economics with insights today from Ed Mills at Raymond James. Not only the data, but the candidates' economic proposals. We're going to stack them up together coming up here on Bloomberg with analysis from our signature panel. G.D. Shanzano, Rick Davis along for the ride this hour, and we start, as always, with a look at the markets. Charlie Pellet has that for us, the Friday trade on Bloomberg. Hey, Charlie.
Indeed, certainly ugly for the bulls right now. Joe Matthew with the Dow, the S&P, NASDAQ, all declining. Jobs Friday, a lot of red on the screen. Right to the numbers here. We'll give you the why in a moment. S&P down 91, 54.11 is where we stand right now, a decline of 1.7%. We've got the Dow down 375 for the Dow Jones Industrial Average, a drop now of 0.9%. NASDAQ particularly hard hit this Friday, down 2.5%. The NASDAQ Composite Index now down 433 points. 10-year at 3.67 with a 2-year 3.66%. Spot gold down $12 the ounce, $25.03 for gold, a drop of 0.5%. And a further retreat for West Texas Intermediate crude with a 67 handle today, down 2%, 67.73 on WTI. Stocks getting hit by a tech sell-off. Bonds rallied as remarks from Fed Governor Christopher Waller bolstered speculation officials will deploy a supersized rate cut in September. In the meantime, hiring fell short of forecasts in August after downward revisions to the prior 2 months, a development likely to fuel ongoing debate over how much the Fed should be cutting rates. On Bloomberg Radio this morning, administration reaction to the jobs report from acting U.S. Labor Secretary Julie Su.
I would say that this is another job report that indicates that we are continuing to see stable growth. Jobs numbers are still up. The unemployment rate ticked down slightly.
And on the topic of labor, Boeing is seeking to avert a crippling strike by its largest union as the clock runs out on the existing accord. Boeing shares today, they're down 2.75%. Elsewhere in the aviation industry, we've got JetBlue shares now slumping 2.6%. Vladimir Galkin, the little-known Florida-based investor who amassed a substantial stake, almost 10% in JetBlue in recent months, has been meeting with the carrier's top executive to discuss a possible board seat. Again, recapping, stocks lower, S&P down 90, a drop right now of 1.7%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet. That's a Bloomberg Business Flash. Balance of Power continues now. Once again, your host, here he is, Joe Matthew.
All right, Charlie Pellet on a Jobs Day Friday. Thank you, Charlie, for setting the baseline here, because Wall Street is as consumed with the data as Washington and the world of politics here, as the two presidential candidates, of course, try to strike the right tone when it comes to their economic proposals. More of them delivered this week, as we've been talking about so much here on Balance of Power, especially when it comes to tax policy. So welcome to Friday. You made it to the threshold of the weekend here on Bloomberg Radio, on the satellite, and on YouTube, where you can find us right now. Search Bloomberg Business News Live, and you'll find us. We have a seat for you in the studio. A special shout and a happy Friday to all the parents in Boston listening on 92.9, a second day with the kids in school. The fall is here. Of course, fall means September, one of the worst months of the year on the stock market. They found a pretty good excuse, it seems, to sell today. Let's talk about the headlines here. First of all, 60 days to the election, and we got jobs, as Charlie just mentioned, 142,000 on the payrolls, leaves the 3 months average at the lowest since mid-2020. Not a great metric. Unemployment rate falling to 4.2%, the first decline in 5 months, reflecting a reversal in temporary layoffs. We talked to Anna Wong yesterday at Bloomberg Economics, who told us the line to watch in terms of what the Fed was looking for. Will it be 25 or 50 basis points? We're edging a little bit closer to 50 with some big downward revisions as a big part of the story today. Anna writing on the terminal in her analysis for Bloomberg Economics, large downward revisions to prior data means adjusting for the BLS's outdated factors for jobs created by business formations and closures, payrolls were likely negative in July. Now, that's where we start our conversation with Stuart Paul, of course, one of Anna's colleagues at Bloomberg Economics. He is our U.S. economist. And Stuart, it's great to have you here. Mixed is the word I keep hearing. You can find numbers to justify probably whatever argument you want. Why is Wall Street so concerned? Things look worse than we might have thought earlier this summer?
I think that there are a few things that are concerning to Wall Street. First is that most of the job gains were concentrated in just 4 industries. You have leisure and hospitality, government, healthcare, and social assistance. And you have a little bit of construction in there as well. So 2 of those, leisure and hospitality and construction, could in large part be hiring because of unwinding of poor July weather effects. Remember Hurricane Beryl crashing into Texas. We have hurricane activity throughout the Gulf and in Florida. And that helped to suppress hiring to some degree in July. So the uptick in the pace of hiring in August can be faded to some extent there. When you then look at what's left, you have healthcare and social assistance and government spending. Those are totally acyclical industries. They're not going to be sensitive to interest rate policy. People are going to get sick no matter what the Fed does with rates, and the government's going to continue spending and hiring. It's an election year, and you tell me which is the candidate of austerity or fiscal conservative policy. Government's going to keep on spending. So I think that folks are focusing on a downside surprise in private payroll gains that were mostly concentrated in acyclical industries when you strip out the effects of weather.
Austerity. Well, I guess that's the comedy portion of the program here. Stuart, I want to hear about these downward revisions. And I know you're going to point me eventually to the birth-death model that is apparently inflating all of these numbers, but to consider the idea of July showing negative growth, how far down are these revisions bringing us in the trajectory that you were taking seriously just a couple of months ago?
So there are a few things that we should keep in mind, and there are a few different types of revisions that are going on. The first is what we get from the quarterly census of employment and wages. It's the sort of report that is developed deep in the bowels of the Bureau of Labor Statistics, where they review millions and millions of firms' documents filed with state unemployment insurance distributors. And they sent out a preliminary estimate that would revise down the total number of jobs created between Q2 of last year and Q1 of this year by 818,000 jobs. That's the biggest downward revision in about 15 years. Then when we look at a different type of revisions, what we get on a monthly basis from the BLS, we see that every single initial release of non-farm payrolls data was revised down this year, except for March. But we also know that March is part of the chunk that's going to get revised down from that quarterly census of employment and wages. So when we see 142,000 jobs added in August, we take it with a little bit of a grain of salt because we've seen such extraordinary downward revisions.
Fascinating. Birth-death model, though, shows a net 100K to August's monthly job change. You put this in place for August. Payrolls probably just rose by 51,000. Can you explain that quickly for our audience?
Sure. So the birth-death model is part of how the Bureau of Labor Statistics estimates the total number of jobs added throughout the country, even though each month it distributes a survey that only goes out to several 100,000 people. So what it does is it takes in the survey data. It also considers what typically happens with seasonal factors. It also takes into consideration how many businesses were likely born and how many jobs were created from those business births and how many businesses shuttered and how many jobs closed. As you said, they assumed that a lot of businesses were created, and that created about 100,000 non-seasonally adjusted jobs. But if you look at, for example, bankruptcy filings, it's not the case that there were that many jobs created, or at least it's likely not the case that many jobs were created given what we're seeing with the bankruptcy data. The BLS is likely overestimating and leaning on its model a little bit too heavily.
Stuart Paul, you can always count on him for a smart answer. Stuart, thank you. On a jobs day, reporting for Bloomberg Economics, he is our U.S. economist. And there you have it for jobs. Now, I'm starting to lose my ability to tell what is good news and bad news around here. Thankfully, that's not my job. It is the job of Ed Mills, who I'm happy to say is with us at the table today in Washington. Managing Director Raymond James. Ed, it's good to see you here in the studio. Thanks for coming in. I'm going to ask you a little bit about some of the candidates' plans that we've heard this week, but I'd love your take on this jobs report this morning, because it does seem like one of these sets of data where you can find whatever it is you're looking for. I thought the whole point, though, was for the Fed to start slowing the job market so it could start cutting rates. Isn't this going as planned?
Arguably, yes. And arguably, it's pretty amazing because when you look back at previous presidential administrations, it's a kind of almost taboo in D.C. to ever celebrate the economy too much because what goes up goes down. And for the Biden administration, this is still an administration that has had record job growth during his term. We're kind of north of 15 million jobs created since he's come into office. And so you would say, all right, someone in that position as his vice president is running, shouldn't that be an asset? But in things in life is always compared to what? And so where the direction is, where the momentum is, any sign of weakness, Trump is going to seize on that and try to weigh down and tie it to inflation and some of the other parts of where voters think that the country is on the wrong track.
Political season. It was just a couple of weeks ago that Jay Powell said the job market was in balance. Is it not?
Well, I mean, when we look at the unemployment rate, when we look at the job creation over the last 4 years after coming out of the pandemic, there's a real lot of positive things to say. Wage growth added into that. I don't think if you were to kind of zoom out and ask someone when you have a unemployment rate in the 4s and job creation that has been steady, people would say that's largely imbalanced. I don't think there would be a view that there is a crisis, but it's kind of a concern of directionally, is the other shoe about to drop? And is that the reason why the Fed has to move here in September and how aggressively should they move. Clearly the debate that we get here at Raymond James.
Are you at 50 now? It seems that we're split on this.
Yeah, I mean, I think it makes more sense to kind of take the over kind of between 25 or 50 basis points. The reason not to is I do think that the Fed is concerned about stimulating the economy too much, having a second wave of inflation. You've seen them take every rate hike that they could get to have the dry powder. So if I would caution to not go too far too fast, if they do 50 now, that could be slower cuts later this year. As to understand what the impact of the election is.
To get to the same spot eventually, just a question of where and how these cuts fall. Ed Mills, you've been watching like we have the candidates roll out economic plans. They're leaving a lot of holes in these plans, I realize.
Rollout is doing a lot of work.
Fine. So we've got a couple headlines.
Yes.
That's what we have. And Donald Trump had a big one yesterday on the corporate tax rate. Let's listen to what he said before the Economic Club of New York.
To further support the revival of American manufacturing, my plan calls for expanded R&D tax credits, 100% bonus depreciation, expensing for new manufacturing investments, and a reduction in the corporate tax rate from 21% to 15% solely for companies that make their product in America.
All right, there it is. So 15%, we've heard that before.
Yep.
Unclear he can get that through Congress. Kamala Harris looking for a higher number in this case, but she put forth a smaller than expected number on capital gains taxes for the highest earners. You throw all this stuff up in the air, Ed Mills. Wall Street thinks it has a sense. It's trying to react to this stuff. Do you have enough of a picture to make a ruling?
So I think what we've said is that who wins the presidency will dictate this debate.
Yep.
And if there is a Trump presidency, most, if not all, of the tax cuts will get extended. If Harris wins, I think there is a strong kind of argument to be made where most, if not all, of the individual tax cuts reset, and what gets paid for could be something that comes later on. As it relates to the R&D tax credit, bonus depreciation, where you led off in those clips, those were all parts of the 2017 tax cuts. Donald Trump gets credit for those. Those have expired. There's bipartisan support to get those extended. Those will be extended. I think the caveat on that 15% if it is made in the United States is because the fact that when we look at the price tag of extending out these tax cuts, just on the individual, it's $4.6 trillion. So doing a 1% cut is about $130 to $150 billion. So you're not going to get down to 15% across the board. But what he is trying to do, and what he always does, is move the goalposts so preserving what's there becomes the compromise versus being what is battled over. It's just, I think, a negotiating tactic from his perspective.
Okay, so that's a starting point here, I guess. How about you paying for all this stuff? On either side here, there have been, I guess, talking points, right? Trump says we'll grow out of it. Drill, baby, drill. We'll lower energy prices to get there, essentially, and stoke growth that will absorb the extra spending and tariffs. Yes, and you can find a lot of economists who have big questions about that. Kamala Harris has her own approach here, this price gouging thing that has a lot of people very upset, and also housing initiatives. Wall Street's done pretty well under the Biden administration. But the markets seem to have a bias here, and maybe you see it differently, that Donald Trump, in fact, will be friendlier to investors. Do you see it that way?
I think it's much more nuanced than that. And my job at Raymond James has been to say, all right, here are the Trump policies that could be good for the market. Here are the ones that are negative, and here's for Harris that are good and negative. I do think that the market generally likes split government. And what I hear a lot at Raymond James is concerns about, is there a second wave of inflation if Trump is reelected under his tariff, trade, and immigration policies?
Well, that's a big question there, and that would not be very friendly to Wall Street. So you're kind of cherry picking then. What do you want to hear Tuesday night?
We're analyzing, not cherry picking. I mean,
okay,
it's like
fine. That's not fair. But you're looking at different elements that might benefit the markets from both campaigns. Can you crystallize that more after this debate Tuesday night?
That is my hope, and that is my goal. I mean, I do think that what the market will be most focused on are the twin fiscal cliffs of the debt limit and the extension of the tax cuts at the end of the year next year. One thing that we've highlighted that we think happens regardless, and I think that's been a fun part of this, is that we think that there's energy permitting reform regardless of who wins.
Okay.
That's going to help and supercharge the Inflation Reduction Act.
Yeah.
That should help CapEx. That will help construction. That will help jobs. And so if either of them win, we'll all focus on some of those positive aspects of the agenda and give a reason why the market should go up. Usually the year after a presidential election for the S&P 500, it's a pretty robust and positive outcome for the market.
Great.
Once we get that uncertainty out of the way.
I've been looking forward to this conversation. Can we stay in touch between now and the election? Because I want to know where your head is. This is important stuff in a conversation you'll only hear on Bloomberg. How Bloomberg can we get? We'll talk to Joe Lavorgna in our next hour as we try to bring you both sides of this issue. Our panel's ahead, only on Bloomberg.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. I'm Charlie Pellet. We've got steep losses for the U.S. equity market. Jobs Friday and an almost 400-point drop right now for the Dow Jones Industrial Average, down 399. It is down 1%. S&P 500 index low of the session again, down 93 now, down 1.7%. 5409 is where that index stands. We've got NASDAQ down 437 points, down 437, a drop now of 2.5%. 2.5%. 10-year 3.70% with a 2-year 3.68%. Spot gold down $24 the ounce, $24.92 on gold. Right now, that's a drop of 1%. West Texas Intermediate crude oil, $67.23, a decline of 2.8%. Stocks getting hit by a tech sell-off. Bonds rallied as remarks from Fed Governor Christopher Waller bolstered speculation that officials will deploy a supersized rate cut in September. Indeed, the question now after the jobs report, 25 or 50 at the next meeting. Ed Mills is Washington policy analyst at Raymond James. He was a guest moments ago right here on Balance of Power.
I mean, I think it makes more sense to kind of take the over kind of between 25 or 50 basis points. The reason not to is I do think that the Fed is concerned about stimulating the economy too much, having a second wave of inflation.
Ed Mills of Raymond James. U.S. Steel advancing after Cleveland-Cliffs. Top executive said he is still in the market for his rivals' assets. U.S. Steel up by about 6% today. We've got Cleveland-Cliffs down 4.2%. Nippon Steel down 1.4%. Again, recapping, stocks lower. S&P down 1.7%. I'm Charlie Pellet. Balance of Power continues now. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
Okay, Charlie, thanks for keeping tabs on the markets for us. We'll get back to Charlie a little bit later on this hour, about 15 minutes, see how things are going on this jobs day. Clearly not so good so far as we continue a very difficult week, a volatile week that will probably show some significant losses by the time it's done. This is all being factored, of course, into the conversation that's going to be had in Philadelphia next Tuesday. The economy will loom large over the presidential debate. Donald Trump, Kamala Harris might be the only one we get. ABC News will bring it to you live here in special coverage on Tuesday night. And a great story on our terminal right now about prep. Once again, the two candidates are taking two very different roads to Philadelphia, literally and metaphysically. Kamala Harris is hunkered down in Pittsburgh right now. She's going to spend the whole weekend there. They're actually doing mock debates, as we've told you, with Philip Raines dressed up in a big suit, red tie, playing Donald Trump. He did this with Hillary Clinton. As I read in this great story by Bloomberg, though, Trump team sees it awfully different. J.D. Vance says, we're not going to have some formal debate prep session. He likes to sit down, workshop one-liners. He considers moments like yesterday that we showed you at the Economic Club of New York to be prep. And so they're coming from two very different areas here, and a lot of questions about what will happen when they come together. Look who's back to talk to us about it. Wendy Benjaminson, back in the nation's capital, of course, reporting for Bloomberg, our senior Washington editor. Nice to see you back.
Nice to see you.
Just in time for the big throwdown here.
Yeah, exactly.
We talked around the first debate when it was Joe Biden. How different is this one going to be? Because the rules, it turns out, Wendy, are the same. The mics will be muted, all the same stuff. I guess we'll have a press pool in the room. But Donald Trump needs to calibrate or modify his approach. In what way, if at all?
Well, not too much, actually, because the strategy within Trump world is for him to let Kamala Harris speak. He wants her to go into her long-winded answers that we saw in the CNN debate, remember? And she can kind of meander down a wandering path to the point of her sentences. It's just one of her personality tics. And she can do that. Trump wants viewers to hear her say that. We noticed in the first debate that Trump, at least compared to the awful performance President Biden put in, he was able to, because he was being disciplined by the muted mics, he was the one who was able to keep his answers short and to the point and relatively on topic. So her goal in this debate is to knock him off a little bit. I think she'll try to fact check him, use her time to fact check, use her time to argue with him. And to kind of probably tick him off a little bit.
That's why she wanted
that would be my strategy.
Unmuted microphones. She
wanted that bad. Yeah,
Biden.
she really did want
So she could catch him in the act.
Right.
She can't do that now.
And they could spar a little bit.
Yeah.
The one thing I don't think we're going to see in this debate is the two of them wonking out over things like the differences between their tariffs on tips.
Okay.
I mean, their taxes on tipped income policies. I think they're going to go for Kamala Harris wants to introduce herself more to people. She wants to talk about her biography. She wants to make him look bad, and his goal is the same. But I think, and he's an experienced showman, so I think he's going to, really, hit all of his great one-liners that he's been working on all week.
Well, I guess so. We're going to find out. It's curious, though, that the headline on the story is style over substance. Right. These are two candidates who have left voters hungry for details. Sounds like they're not going to get any.
They may not. I mean, the questions should elicit some factual answers, but I don't think they're going to spend a lot of time on that. So
it's a personality contest.
This one might be a personality contest, but we'll see. Maybe they will get into it.
Knowing there's a good chance this will be the only debate we get between these two.
Exactly.
Right? I mean, depending on how this goes, I suspect we'll determine whether there's a second debate.
Right. I mean, they just want to keep their base and attract a few new voters, and maybe getting into the weeds on policies might not be the way to do that.
Interesting. This is a 9 o'clock throwdown. She doesn't have the whole 8 o'clock issue that Joe Biden have.
No,
what issues does she have, though? Is it train of thought, as you said, the meandering answers? Because Donald Trump was called out for that frequently as well. He was talking about wind the other day, and he went right into bacon, and then there was and sometimes these sometimes they're both hard to follow.
Right. Oh, absolutely. And Trump is famous for winding down into sharks and batteries and things like that we don't know. She is actually a very good debater, and remember, she is a prosecutor.
Ask Joe Biden.
Exactly. She nailed him in 2019 on his 1970s vote on busing to end segregation. She hit Tulsi Gabbard pretty hard in debates with in that year. And if you remember the Brett Kavanaugh Supreme Court confirmation hearings, when she wants to drill down and nail someone, she is quite capable of doing it. She knows how to operate
in a hearing, that's for sure. We'll see if she can duplicate that.
And he can only hurt himself with the one-liners if he calls her nasty or questions her race and ethnicity. That could go bad.
Wow, we're doing this. Wendy, thank you. It's great to have you back. Wendy Benjaminson. See, she's still with us, Washington senior editor here at Bloomberg, and the force behind our Bloomberg swing state poll. You know who else is here? I've been looking forward to this. The voice of New Hampshire, the voice of the establishment Republican Party in New Hampshire. I'm not talking about Chris Sununu. I'm talking about Steve Dupree, former chairman of the New Hampshire Republican Party, now owner of Dupree Companies, and he's been with us before. Of course, we spent some time together in New Hampshire. He was behind Nikki Haley, and now he's trying to figure out what to do in November. Steve, it's great to see you. Welcome back, and thanks for joining us here on Bloomberg. What do you want to hear on Tuesday night, or is your mind made up?
Well, I'd like to hear substance, but I think, as we've all predicted, it will be short on substance and more on style. And I think the commentators have nailed it. We have a showman who's great at one-liners, and we have a prosecutor, former attorney general, who's good on the facts. So it'll be very interesting to see the interaction. I think for people who are still on the fence, there are a lot of people who remember what they think was a better economy under President Trump, and he's going to remind voters of that. And I think try to put Vice President Harris on the defensive, saying, hey, this is your economy and the price of groceries is your responsibility. And she's got to counter that. She's got to somehow separate herself from the Biden administration and make Donald Trump and the way he conducts himself and his erratic policy pronouncements the issue, and somehow diplomatically also point out that now there's only one very older candidate in the race who, if elected, would be older than Joe Biden was when he took the oath of office. So it's going to be a very interesting show. I think there is a group of persuadable Haley / McCain / Bush / Reagan Republicans out there who have not made up their mind. They probably disagree with many of Vice President Harris's policy proposals, but they're also offended to some degree by the conduct of former President Trump. They're
understood
out there, and they could determine the election.
They could determine the election. Certainly in a state like New Hampshire, if we zero in on the state that you know so much about. Steve, there was reporting this week that New Hampshire might be off the table for the Trump campaign. That take has been challenged. I wonder if you see it differently.
No, I know the Trump folks very well. I know Corey Lewandowski, Steve Stefanik, some of the leaders. That was a foolish pronouncement, apparently, by a volunteer from Massachusetts. The Trump campaign is working hard in New Hampshire, and the assumption or the reporting that they're pulling out is just incorrect. And I will point out that in 2016, when he ran, it was no effort. In 2020, it was loosely organized. they are very well organized. They showed that in the primary, and they are contesting the state. And I know the polls currently show Vice President Harris up by about 6 points, and she was here and had a very successful visit on Wednesday. But this state is very much in play.
It's interesting she chose to go to New Hampshire to talk about the economy, Steve, and I'm wondering if anyone is resonating with you as a fiscal conservative. It's not a question of which candidate might be responsible for more deficit spending. It's about which candidate will spend more. Am I wrong?
No, and for those of us who actually believe the debt and deficit matters, what's happened? I remember in 2008 when John McCain and Barack Obama were arguing about an $8 trillion deficit, not one the size we have now. It's just amazing to me that neither candidate seems focused on that, because there aren't easy answers to it, as we all know. I actually thought it was a smart move by Vice President Harris to come to New Hampshire and talk about supporting small businesses, because this is a state primarily made up of very small businesses. So I think that's an appealing message. That's a differentiation from what the Biden administration did in many regards. So from all accounts, and I was not there, I don't go to many political events. I try to avoid as many as I can. We've got a bunch of hot races here in New Hampshire. It was a successful visit. And of course, every time President Trump comes to New Hampshire, the rallies are big, and he has an incredibly large crowd the way he does at all of his rallies. So I think both of them are fighting hard. Both have organizations in the state. In fact, there are races down ballot for governor, for Congress that are very hotly contested. It means the Trump campaign will be here, and those reports are just not, that they've somehow pulled out, are just not accurate.
Well, this is really important to hear from a credible voice in New Hampshire. I've only got about a minute left. Steve, will small business then break for Trump or Harris in New Hampshire?
You know, that's a very interesting play, because those of us in small businesses like my own remember some of the tax breaks and tax cuts that helped, particularly as we went through, right before we went into COVID. But then again, the Biden administration put in lots of supports that helped this state and kept the economy going. So I think that small business people are very much in play, just like you hear the president and the vice president talking about not taxing tips for wait staff and workers like that. That's very popular, and they're both trying to appeal to that small slice of the audience that in 6 or 7 states can make the difference in the outcome.
The voice of Republican politics in New Hampshire, and of course the Snowshoe Club. Steve, it's great to see you. Your input is important to us. Let's stay in touch as we get closer to November. Steve Dupree. Dupree Company's former chair of the New Hampshire Republican Party. There you have it. We've gone around the horn here so far this hour with a lot of different ideas on the fiscal proposals, the tax proposals from these two campaigns on a big jobs day. We'll crystallize it all next with our panel. Jeannie Shanzano and Rick Davis are with us on the Friday edition of Balance of Power, and it's all coming up next right here on Bloomberg.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. We are just about at the lows of the day right now with the Dow, the S&P, NASDAQ very much in the red. The NASDAQ 100 index, by the way, now down by 500 points, a decline of 2.7%. Stocks getting hit by a tech sell-off. Bonds are rallying as remarks from Fed Governor Christopher Waller bolster speculation officials will be deploying a supersized rate cut in September. Right now, we've got the S&P down 93 to put it all in context, down 1.7%. Dow Jones Industrial Average down 396 points, down by 1%. NASDAQ down 2.6%. The NASDAQ 100 index, again, worth repeating, down 507 points now. Again, the NASDAQ 100 index down 2.7%. 10-year at 3.71% with a 2-year 3.67%. Spot gold, $25 lower, down 1%, $24.91 the ounce. And West Texas Intermediate crude down 2.7%, $67.27 for a barrel of WTI. Well, as we have been reporting, August's sluggish jobs report is bolstering speculation the Fed will deploy a supersized rate cut this month. And with that story, here's Bloomberg's Vinny Del Giudice.
Payrolls rose less than forecast, 142,000 in August, following downward revisions to June and July data. Wall Street traders, in turn, boosted wagers on the big shebang, a half-point Fed rate cut at the September policy meeting, the 17th and 18th. New York Fed President John Williams says it's now appropriate to ease and that the jobs report is, quote, consistent with what we've been seeing, a slowing economy and a cooling off in the labor market. Vinny Del Giudice, Bloomberg Radio.
Boeing shares now down 3.2%. Boeing seeking to avert a crippling strike by its largest labor union as the clock runs out on the existing accord. Rank-and-file workers will vote twice on September 12th, once for whether to accept the Boeing offer and then on whether to strike. Again, we've got Boeing shares down now by 3.3%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now whenever and wherever you get your podcasts. I'm Charlie Pellet. That's a Bloomberg Business Flash. Balance of Power continues now. Back we go to Washington. Once again, your host. Here he is, Joe Matthew.
All right, Charlie Pellet, thank you. He makes it sound so steady, even when the markets are pointing lower. Tough day here for Wall Street coming off the jobs data, and it comes against the backdrop of economy week for both candidates here. As we've been discussing for the balance of this hour, not only Donald Trump, but also Kamala Harris up in New Hampshire and elsewhere this week, rolling out economic policy proposals, in many cases, tax proposals, that has Wall Street thinking hard about who would be more friendly to investors, and of course, about the state of our economy that may or may not be headed for a soft landing. People are talking about 50 basis points now later this month, and a move that you know will be deemed political if it happens. Let's assemble our panel. They made it to Friday, too. Jeannie Shanzano and Rick Davis, of course, Bloomberg Politics contributors. Jeannie is a political science professor at Iona University, and Rick, partner at Stone Court Capital. Great to see you both. Rick, what goes through your head when you see a market like this? The numbers at the end of the day here for the week are going to be ugly. We know that. The jobs report is raising real questions about the trajectory of the economy, and all of this is going to collide in a couple of weeks with a major election. We've got a debate next week where I'm told by Bloomberg's own reporting it's going to be style over substance. So how do voters start making decisions between these two candidates when it comes to the economy with the information that we have?
Yeah, and I would say, Joe, there's another major event that I think the public will get some attention on, and that is the decision by the Federal Reserve on what to do about rate cuts. Today's story about jobs wasn't a job story. It was a rate cut story. I mean, like, this is the one thing everyone has been talking about for a long time. And I think post-debate, that'll be one of the next real, sort of important events in the news cycle. Certainly ranks above some of the legal stuff that Donald Trump's going through and that kind of thing. So I do think the economy reigns supreme, and we know that from the voters. They've been very consistent throughout this election, regardless of who the candidate for the Democrats were, that the economy, cost of living are the number one issues by far and away. And so it's not a surprise to me that September starts with a thorough vetting of both candidates' plans. And I would say the one thing I would differ with on the debate prep is that I've heard today is everyone's talking about is style over substance. I think I think the onus is on both these candidates to reiterate what they've been trying to sell in the last week about their economic plans, because the one who comes out the winner in that category is likely to be president.
Jeannie, as I said coming into this conversation, Rick's right. We're going to go from the debate 1 week later into this Fed meeting, 17th and 18th. Markets are leaning a little bit more towards 50 basis points, and the story that day is going to be that this was a political move, a politically motivated decision by the Fed, right? You can write the story now.
That's right. And we can just listen to Donald Trump say that if he is reelected, he would indeed like to take over the Fed. He would like to control it. So I'm not sure how Republicans complain about a political impact on the Fed that is not a reality now, when his very economic policy proposals include a more muscular control of the Fed. I do think that it is important that we listen to what the candidates are saying out on the campaign trail. And what you hear from both of them that is troubling to me is that these policies do not add up. At a time when we have a $40 trillion deficit, they are talking about using the power of the federal government to handle it, and they never explain how that will be paid for. We heard Donald Trump in his speech talking about this sort of economic nationalism, more tariffs, sovereign wealth funds, and that's somehow going to address the economic challenges we face today. And any economist you talk to says that that doesn't make an ounce of sense. And I have similar criticisms of what Kamala Harris is putting forward in a different way. It's this attempt to use the power of the federal government to clean up problems. And it's also this idea that we are going to tell you anything you want to hear so we get through this election. And we are willing to throw out all our ideas and our beliefs to get your vote. And that should be troubling as well, because we have an economic challenge here, just looking at a $40 trillion deficit, let alone anything else.
Yeah. That's true. $40 trillion. Enter Elon Musk. Guys, you saw this yesterday. Donald Trump talking before the Economic Club. This, by the way, was something that was a spontaneous idea delivered by Elon Musk during the interview that he held with Donald Trump on X a couple of weeks back. This idea of a government efficiency commission. Remember, he said, God, I could even lead that up. Well, apparently he's going to if Donald Trump gets elected. Here's the former president from yesterday.
I will create a government efficiency commission tasked with conducting a complete financial and performance audit of the entire federal government and making recommendations for drastic reforms. We need to do it. And Elon, because he's not very busy, has agreed to head that task force.
Now, this is interesting, Rick, because people actually understand this idea conceptually. We're not talking about some esoteric economic data here. Yeah, you get the Elon Musk, bring him in and have him control spending. An idea like that could actually resonate, I suspect, in a debate like we're going to see on Tuesday night. But what do you think? Is Elon Musk the answer to overspending by the government?
You got to look at it both substantively and figuratively. Figuratively, Elon Musk, he's seen as a guy who gets things done, right? I mean, he envisioned a space program in the commercial space that nobody ever thought of. He's, drilling tunnels under cities for rails. He's doing all kinds of really nifty stuff. And so there's a level of credibility associated with Elon to get things done, right? That you may or may not like his views politically, but, he certainly accomplishes a great deal in a short period of time. And so that piece of it is a good thing for Donald Trump to attach himself to. And there's nothing political about Elon that Donald Trump hasn't already done in spades. So there's no political baggage to Donald Trump because the two of them look a lot alike. And so, yeah, I think overall it's a great concept in the sense that the other third component of this is the American public is tired of government spending so much. This is one of the things when you ask people, they don't say, oh, the federal deficit or overspending is the number one or two issues. But when you ask whether or not the government should be able to balance its checkbook, everyone says yes. I mean, and when you then talk about reducing the deficit, which Donald Trump did talk about yesterday, even though he didn't really give an elixir on how to, they like that idea. So the idea that you're going to have a commission headed by a guy who gets things done, who can, go out there with a sharp knife and cut spending, this is much more Republican orthodoxy than anything I've heard from Donald Trump in a while.
Well, so tell us your thought on that, Jeannie. Does Kamala Harris have an answer? Is there a Democratic version of such a thing? And I have to ask you both, should Elon Musk be auditing NASA?
They're turning to him to get these astronauts down. Pretty soon he could be auditing them. This is an old idea. To Rick's point, we've seen industrialists, successful men and women from the business community, from Wall Street, come in and do phenomenal work in government. We saw it during World War II. How do you ramp up industrial production so that we can fight the war? So this is not a new idea. It's an idea that we hear over and over again. Today, I am saying that Elon Musk is the new Al Gore, because don't we all famously remember Al Gore doing the same thing? Simpson Bowles, you can go down the list. Reality, though, is that this is not unique to Donald Trump. Kamala Harris said the same thing about cutting red tape in her speech about small business in New Hampshire. It's something that needs to happen. But the reality of, can Elon Musk come in and be effective in that way is another question. And so that's where I think, yes, politically, this is a win for Donald Trump. But is it going to result in the kinds of cuts that we need to see? I'm not so sure we've seen any meat on the bones as to what somebody like Elon Musk could or would do. He can't come in and cut without Congress, who controls the purse. So there's that big portion of this as well.
Well, of course, Elon Musk is no Alan Simpson. Rick, what form would this take if Elon Musk decided to go to work for the Trump administration? And to what extent would Congress have to play along?
Yeah, I think it looks just like the Grace Commission of 1982 by Ronald Reagan, right? And Ronald Reagan did an executive order that set up the Grace Commission. He actually set up, I think it was, I'll be very precise, the Private Sector Survey on Cost Control. Sound familiar? That's exactly what we're doing here. And Grace put together a team and documented where spending in the federal government, in those days, $1 trillion of spending. Nowadays, it's $6. We could find ways of creating more efficient government, and I think that's universal. I think it'd be very hard for Democrats to talk about some of these cuts in a way that isn't, sort of disingenuous. They've been feather bedding the federal government for decades. Now's a chance to try and take a step back. So if Elon Musk can actually accomplish something like that, Donald Trump certainly has the authority, if he's president, to do it. And by the way, I think that Kamala Harris did herself a big favor by stealing some of the thunder out of Donald Trump for tip taxes rollback. Why not do the same thing? Say, you know what, we're all excited about the idea of making government more efficient, and we need to take a look at how to do that.
I'm glad you mentioned the Grace Commission. June 30, 1982 was the executive order. And on that day, Rick, I'm sure you remember it, Ronald Reagan used a phrase that has now been closely associated with Donald Trump: drain the swamp.
Drain the swamp. Yeah.
Jeannie, wouldn't it help Donald Trump to draw more lines directly to Ronald Reagan to make this argument?
Oh, absolutely. But here's the challenge. We had Donald Trump out yesterday. No tips on taxes, no taxing of Social Security, no change in entitlement benefits. Everybody gets everything they want. So Elon Musk needs to start with Donald Trump's own proposal. How are you going to pay for all of this? He is talking spend, 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 tax, tax, tax. And that is neither efficient nor does it make economic sense either. So yes, Donald Trump can hearken back to everyone he wants, from Ronald Reagan to Al Gore to Simpson Bowles. But the reality is you need an economic plan that makes economic sense. And that is not what he is proposing. And there's some of what he's saying that does make sense. You can move towards deregulation, these things. But the reality is, overall, he can't say how he's going to pay for any of this, except we're going to see such great growth. By the way, we won't need to worry about how we pay for childcare. And that childcare question answer was absolutely astounding, or I should say non-answer. Great growth doesn't pay for childcare.
Jeannie Shanzano and Rick Davis are going to stay with us for more in our second hour. We're going to try to animate both sides of this argument coming up. Joe Lavorgna, America First, and Heather Boucher from the White House Council of Economic Advisors will join us with their takes on this coming up next on the fastest show in politics on Bloomberg.
politics to the world of business. This is Balance of Power. Live from Washington, D.C.
Jobs Day residents from Washington to Wall Street. Welcome to the fastest show in politics, with August data bringing fresh concerns about our economy, just as the presidential candidates frame their economic proposals. I'm Joe Matthew alongside Kaylee Lines in Washington. Welcome to the Friday edition of Balance of Power. Kaylee, this all comes ahead of Tuesday night in Philadelphia when they might have to do some splaining.
Yeah, Kamala Harris, if she wants to talk about a strong economy under the administration she's been part of for the last 3.5 years, it may not be looking as strong now as we consider not just the softer payrolls print of 142,000 jobs added in August, but the downward revisions of 89,000 jobs.
Tens of thousands of jobs that we thought were there but are not. And a lot of question about what the Fed is going to do. Kaylee, you can write the story already. Politically motivated will be the answer by Republicans if we see a 50 basis point move.
Yeah, and Fed officials who are speaking today in the aftermath of this data do seem to be suggesting they're at least open to it. But of course, next week's inflation data probably going to prove critical in that ultimate decision 2 weeks from now.
Yep, that's for sure. We've got a couple of important voices we're going to bring you this hour to try to illuminate both sides of this argument, particularly when it comes to the tax proposals that we have heard from both of the candidates. Joe Lavorgna is going to be with us from America First Policy Institute, and Kaylee will be joined by Heather Boucher from the White House a bit later this hour, too.
Yep, important conversations are ahead. But first, let's talk about how this data is impacting financial markets today. Charlie Pellet has a look from New York. Hey, Charlie.
Thank you very much, Kaylee Lyons. Good day from New York. Indeed, it's been a familiar theme here. Just about every update I've told you lows of the day, and indeed that is the case right now with the S&P down 95. 5407 is where we stand. We've got the S&P down 1.7%. The Dow now down almost 400 points, down 395, a drop of 1%. NASDAQ, the composite index, down 2.6%. The NASDAQ 100 index down 515 points. For the NASDAQ 100, a drop now of 2.7%. 10-year at 3.72%. The 2-year 3.69%. Spot gold down $29 the ounce, $24.87, drop right now of 1.2%. And West Texas Intermediate crude, a further retreat there, down 2.3%, $67.56 for a barrel of WTI. The Federal Reserve's Vice Chair for Supervision will preview changes to the Biden administration's signature bank capital proposal on September 10th. Mobileye shares, they're down now by 7.2% after Bloomberg News reported Intel is considering options for its stake in the automated driving systems provider. Intel down 3.2%. Again, Mobileye shares, they are tumbling now by 7.2%. So again, recapping, stocks lower, jobs Friday, the Dow, the S&P, NASDAQ all in the red. S&P down 1.7%, 10-year 3.72%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash. Balance of Power continues now. Back we go to Washington once again. Your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet, thank you so much. Of course, here on Balance of Power on Bloomberg TV and radio, what we do is bridge the political world with the financial and economic one. And of course, we're in for it in that regard in the next few weeks, because of course, it's next Tuesday, September 10th, that Kamala Harris and Donald Trump will be debating on ABC in the first presidential debate. The next morning, we get a crucial inflation reading with CPI data. And then 1 week after that, Joe, the Fed has to make a decision. We know it wants to cut rates this month. The question is going to be, by how much?
That's correct. We're in for it, Kaylee says. And she's right. That's why we turn to Michael McKee to start things off. Before we get to Joe Lavorgna for his insights on this, we want to set the baseline on the data we got this morning. Wall Street clearly doesn't like it, but you can find numbers in this report, Michael McKee, to justify a lot of different arguments. I'm just wondering what has your attention more today. Is it this new payrolls number that left some wanting, or is it the downward revisions that recharacterize the summer?
I would say yes to that.
Got it.
There were two things. When the numbers dropped, I had two thoughts. One is that if you're in the markets, this is a really tough report because it gave something to both sides. Obviously, we saw slower job creation, although better than last month, and we saw a big revision. And so, that's not good news on the job creation side. But then the unemployment rate ticks down, and for all the right reasons. We saw more jobs created in the household survey than were lost, and we also saw a smaller rise in the labor force. So the underlying numbers aren't all that bad, and basically what you had is kind of a rebound from some of the bad news in July. So where does that leave the Fed? That's the hard part for them, because they've got to balance that with the idea that we are seeing a slowdown, and maybe it's starting to happen in the labor market faster than they anticipated. Chris Waller, the Fed governor, came out today and said it's not.
Yeah.
That he's not worried about the rate of job creation because his view is a neutral rate of job creation would be 80,000 to 100,000. So they're still well above that. So you take that all together and you think their base case going into this was going to be 25 basis points, and that's probably where they're going to end up.
Well, but if you parse through some of the other things Christopher Waller said, he also said if appropriate, he will advocate for front-loading cuts. And front-loading to me means you might go bigger sooner, potentially. Mike, is this a Fed, because he's not the only Fed speaker we've heard from today, obviously, that is purposefully trying to leave the door open? And if that is true, does that mean a week and a half from now, the Fed actually has the potential for surprise because we won't know exactly what the move is?
Absolutely. They are trying to leave things open, and
Doesn't happen very often.
I'm not sure why. We do have 10 days coming up of silence from the Fed, and unless they do a leak to the Wall Street Journal again, then the markets right now, as of the moment, are betting on a 25 basis point cut. If they want to go 50, they'll have to let people know.
Mike, I'm sorry to interrupt you, but we do have some breaking news coming out of New York. I just want to mention for our TV and radio audience, this is in Donald Trump's hush money conviction. Of course, he was convicted of 34 counts of falsifying business records. He was scheduled to be sentenced later on this month, but that sentencing has now been delayed until after the election. It will now take place on November 26th. Of course, Joe, once all the votes have been cast.
Yep, that's right. I was just going to add to your timeline there following the Federal Reserve meeting and the looming economic data that it would be, in fact, on that second day of the meeting, September 18th. We thought we were going to see sentencing. Now we wait till after the election. And of course, Kaylee, we learned yesterday that when it comes to the election interference case, Judge Chutkan making it clear that trial will not happen until after the election. So we can check these boxes right now.
Yeah, what could have been a courtroom campaign.
That's right.
Doesn't really seem to be so.
Is no longer. How true. As we spend time with Michael McKee on the data today, Michael, what are you going to be listening for on Tuesday night in this debate? Before we bring in Joe and his insights on the data and what we're hearing from the campaigns, we want to start filling in blanks. What's the biggest one you've got?
Well, the second thing I was thinking today when I saw the jobs numbers was if I were either campaign, I would kind of stay away from them today because it's kind of hard to explain what's going on. And I think what you'll hear is both sides talking in platitudes. We got platitudes and no details from Donald Trump yesterday, and we already know much of what he says doesn't make economic sense. On the other hand, Kamala Harris hasn't told us a lot of economic plans. So I think both of them are going to stick to the idea that however they say it, it'll come down to, if I'm elected, it'll be better for you, the voter. Now, do the voters care? I'm not sure in that sense that they will be, that all the screaming from the Washington press corps about not getting details matters as much to the voters. I don't think they really pay attention to the underlying economic dynamics in these plans, and we all know that 90% of whatever either one of them says is not going to be adopted on Capitol Hill. So it is about the economy, but it's not going to be about any great detail that they offer.
All right, Michael McKee, Bloomberg's international economics and policy correspondent. Thank you so much for joining us on the data today and, of course, the economic plans of both of these candidates. And one of those candidates did just get a good piece of legal news, something he had been arguing for again in the hush money case. His sentencing has been delayed until after the election. It will now take place on November 26th, not September 18th. Donald Trump, of course, had argued that a sentencing prior to the election was election interference, Joe, and that will no longer be happening, according to the ruling today of Judge Merchan.
That's right. We're going to go into this election with decisions based on policy, not legal action, clearly in this case, Kaylee, but we also have to allow for the idea that these trials could take place next year if Donald Trump doesn't win the election.
Yeah, it's a fair point. But of course, a lot of votes still have to be cast that will determine
that's another world, right?
That, of course, if he wins the election, he has a number of policy proposals he would like to see enacted in a second term in the Oval Office. And that's what we want to discuss now with Joe Livornia. He is America First Policy Institute Senior Fellow and, of course, served in the first Trump administration. Joe, welcome to Bloomberg TV and Radio. It's great to have you. We do want to talk about some of the tax policy proposals specifically, but I do have to ask you, just given the news that we've gotten here. Do you actually think Donald Trump's various legal battles, considering he also held a press conference earlier today on the civil E. Jean Carroll case, is this factoring into the vote at all? Do voters care about these things anymore?
I'm going to stick completely with the economics, which is what I do. So I'm not going to answer that.
Okay, so if it's the economics that matter, sir, we can talk about those.
I want to talk about the economy and policy. And
all right, let's do it. I'm looking forward. I am looking forward to this conversation. So let's just start with what we heard from Donald Trump yesterday. He'd like to cut the corporate tax rate to 15% for companies that make products in the U.S. He wants to make his 2017 tax cuts permanent. We know about the no tax on tip policy. We can get to different areas of revenue generation that you think might offset that first. But if we could just tally up the toll that will take in revenue lost, what figure does that put you at?
We have broad contours of what policy looks like, but we can't score anything. What I can say is the CBO scores the Job Cuts and Tax Act of 2017 as losing revenue, which I don't believe. I don't believe that's the case. I don't believe the CBO is doing enough dynamic scoring. If we look at their estimates back in 2016 and what they assumed, the TICJA, as it was sort of known on the Hill, what that would produce in revenues, their revenue estimates were well short of what actually turned out to be the case, especially on the corporate side where revenues were actually quite strong. So we need to eventually, we'll get more details and we'll see how things play out, but I'd be careful on scoring this because right now we're not that detailed yet.
Well, understood on scoring. Voters are trying to make decisions based on the limited information they have here, and a lot of the analysis that we're hearing is that while Donald Trump seems to be considered more friendly to Wall Street, his idea to make permanent the tax cuts and add the tariffs would have a more inflationary impact than what Kamala Harris, the Democrat, is proposing in this case. Is that wrong?
I don't. The thing is, the problem is that everybody looks at these different proposals in isolation. You have to look at lower corporate tax rates, less regulation, permanency of tax cuts, much cheaper energy costs, an intention to onshore and reindustrialize, all as a comprehensive package. You can't just look at one in isolation and say this is inflationary and this isn't. What I could tell you is on the energy side, in terms of lifting energy production, to be a real commitment to expand energy production and get energy costs significantly lower. If we want to do a simple inflation adjustment, I could tell you that the energy share of the economy is almost twice the import share of the economy. So again, if you get those lower energy costs, you would offset any tariff impact. And by the way, as the president said yesterday, these things are open for negotiation. That's why the specificity at this point, I think, is premature. It's a transactional approach basically to help U.S. manufacturing and jobs. And you either may believe that theory or you may not. But I think it's very, it all holds together when you look at it in its totality and not just break apart simple pieces.
So if we want to focus on energy here specifically, if there were a blanket tariffs on all imports into the United States, that too would impact energy, right, and could result in higher energy costs. I'm sure you're going to say that Donald Trump wants America to produce more, to be energy independent, but we're already pumping a record amount of oil and gas because these are companies that like to exercise capital discipline and are returning a lot to shareholders. Is that what you think is going to change here?
I just want to change one thing you said. The thing is, we have increased production, but you have to keep in mind that to keep low and stable energy costs in place, you have to have long-term capital investment. So the intention is to do things that will improve the energy platform in a way that it's sustainably producing cheap, low-cost energy, which we had under the Trump administration, if you look at where energy costs were and if you look at where inflation was. So I think the plan is very comprehensive and it makes sense when it's looked at in totality.
We're looking at WTI crude oil below $68 a barrel in the futures market here. Joe, where should that be?
I mean, the market is pretty efficient. I think part of the reason the oil markets and energy markets are soft right now is growth. I'm very downbeat on growth.
Yes.
I was listening to Michael McKee talk about the data. I looked at the data today as being very soft. If we look at the private sector, excluding healthcare, because healthcare is very interconnected, intertwined with government policy, the last 3 months we haven't even generated 40,000 private sector jobs. The unemployment rate did tick down 0.03. in August, but temporary hiring fell again. Manufacturing was weak. One of the areas of strength was in construction, but it seems to me that's ripe for a major pullback in light of the big drop in construction openings and the fact that construction activity is extraordinarily soft. We look at home sales or look at pending home sales or starts, permits, builder sentiment. All those things suggest to us that the construction industry could shed upwards of 1 million workers, which by itself would push the unemployment rate up near 5%.
Well, that certainly would be something. 4.2% is where we sat as of today's figures. As you talk about construction and housing specifically, of course, we know a lot of that has to do with just where interest rates are in Federal Reserve policy. Donald Trump has suggested, including in an interview on Bloomberg Business Week, and he's doubled down on it a few times now, that he does think the Fed should have input when it comes to monetary policy. What would that look like if the U.S. central bank wasn't fully independent of politics?
Well, the Fed is an independent institution, but that doesn't mean the Fed is immune or should be immune from people criticizing it both on a constructive basis. We know that in 2018, and I argued this when I had nothing to do with the administration, that policy was too tight, and the president agreed, and the Fed wound up cutting because the Fed was too tight. One of the reasons why monetary policy is tight is because inflation's been high, and the Fed has reacted to that by keeping rates elevated. I think rates will come down, rates need to come down, but that's because I believe the economy is fundamentally soft. We've had basically every month, almost every month in the last 3 years, we've had the index leading indicators negative. This week we saw industrial production in the ISM at its lowest level since pre-COVID. So yes, signals are mixed, but unfortunately, they get mixed at turning points. And the revisions in the data are very important because revisions in the data often tell us about the underlying momentum in the economy. And the revisions we had that we learned about a few weeks ago, the 800,000 plus, my analysis suggests it'll be closer to 1 million, but importantly, these current revisions do not pick that up. So we could easily learn a year or so from now that if we're not in recession, we're very close to one, and that ultimately will bring rates down, which is a good thing. But I think the comment on policy being restrictive, I think I don't have a problem with that.
Yeah, we could learn that this was a very different summer than we thought when it comes to the job market here, Joe. So a lot of people say 50 basis points. Let's get to it. The Fed's late, but you also know as well as I do that we're going to hear a loud cry that day that a cut of that magnitude at this time is politically motivated. What will you say?
I can be critical of the Fed, and I do it in a constructive way, and I think the president has as well. What I could tell you is Jay Powell did market easing back in December, and then went on 60 Minutes, somewhat similar to Ben Bernanke, and talked about the need eventually to lower rates from a restrictive level. I was a little bit surprised that the pivot in June, when the Fed had 3 cuts, they went to 1, and then by July they were talking about maybe cutting at that meeting. At least several members were. But I think they've laid the groundwork for rate cuts. I do think the economy is soft. I'm not sure whether 50 or 25 is going to make a huge difference in terms of the longer-term outlook, and I don't think it really necessarily plays into the politics because, as you yourself have suggested, economists are debating whether it's 25 or 50. So I don't see this really as being a political decision.
All right. Well, that's fair enough. And as we've said, the Fed has made it very clear it prefers to make these decisions independent of politics. As we consider, though, the idea that monetary policy does have a lagged effect on the way it tightens and on the way it eases, regardless of whether or not Donald Trump or Kamala Harris wins, what kind of economy do you expect they will inherit in January based on how much policy has eased and to what extent that has actually influenced economic outcomes?
That's an excellent question because it's not clear we're in recession, and we may avoid recession if the Fed starts cutting and equity markets can get excited about the future. I'll leave it to the markets to decide what it thinks is going to be better for policy. Clearly, I'm familiar with the president's economic policies and think from a supply side, capital formation, productivity enhancing, household income and wage boosting phenomenon that his policies will work much better than the alternative. But to be honest, I don't know what Vice President's economic policies are at this point. We've got little bits and pieces. She'll have to describe it. But the economy will be influenced by what happens in November, and we'll see what happens. I do think in the short term things are soft. I hope we avoid recession, but we'll see.
Yeah, as we spend time with Joe Lavorgna here on Bloomberg TV and radio. I just want to get back to this question about tariffs and energy, where we spent a little bit of time, Joe. There was reporting in Politico this week that the idea of imposing tariffs up to 20% on all imported goods would have a direct impact on gasoline exports. The 8 million barrels of crude oil that the U.S. imports could be impacted and cause ripple effects throughout the energy space. How do you balance that with drill, baby, drill in an effort to lower prices?
Well, I mean, look, you have to remember, there are going to be carve-outs in all likelihood. This isn't good. Again, the tariffs are used as a means to re-onshore and as a means.
Should Donald Trump propose that carve-out? That's important news if that happens.
Well, no, I'm saying that when I say that, it's in terms of there are transactions involved. In other words, there are certain countries that the president, I think, has a certain view that maybe not contribute as much to NATO, or maybe aren't having what might be a level playing field or fair trade. So I think it kind of depends on what happens as things evolve. There's nothing that's predetermined, and the president yesterday was very clear in not giving specific numbers as it related to specific regions and specific policies. It's just an overall narrative, and we kind of know where the direction of things are going, which is tariffs will be used to improve U.S. bargaining position as it relates to key industries and things of that sort.
Are you hoping, Joe, that you'll have a role in the shaping of that policy if Trump wins a second term?
Thank you for asking. I'm very happy. I actually have a Wall Street day job, and we'll see what happens. But I very much like what I do, and if I get the call to serve, obviously I'd be honored. But right now I'm focused on the markets, which you know are very tricky and interesting. We're trying to figure out 25 or 50.
All right, stay in touch with us on that. Joe Lavorgna, great to have you back, Joe. America First Policy Institute Senior Fellow. That's a deep dive with Michael McKee and Joe Lavorgna, with our eyes on the markets, of course, on a big day for economic data against the backdrop of these economic proposals from the two candidates. We add a layer of breaking news here, as we found out earlier this hour, Kaylee, the sentencing in the Bragg case in New York, the hush money trial that brings us back to Stormy Daniels and Michael Cohen and so forth, delayed until after the election. Kaylee, will have to wait till November 26th.
Yeah, although we will get some more before then. On November 12th, the judge will rule on his immunity. Remember, he and his legal team have argued, in light of the Supreme Court decision from this summer, which found that he does have immunity for official acts, that might need to mean this case in which he was convicted is thrown out, or potentially change the outcome here, because, of course, these were in part checks that were signed while he was sitting in the Oval Office, raises a lot of questions. So they'll get a decision on that by November 12th. But again, November 12th, all the votes will be in.
That's correct.
At that point, nothing is happening
the race may
prior
not be
to
called,
the election.
but the votes will have been cast. Remember that whole argument about official business versus unofficial business? This is actually what this is all coming down to here now. So another date to circle on your calendar here, knowing as well that the election interference case brought by Jack Smith, we learned just yesterday, will also have to wait now officially until after the election, Kaylee.
Yes, although we will get some things in that case before then. Briefs that are filed from the special counsel that could unearth evidence that the American electorate has not heard about at this time.
June Grasso is with us now. It's amazing how the redhead hits the terminal. June Grasso pops up in the studio. There she is, the host of Bloomberg Law. Yes, indeed. Another one, June. Look, we saw this coming here. A couple of important court dates for Donald Trump. November 26th means what for this case?
So we're talking about the election interference case right now, because we have a couple of things.
No, this is Bragg. We're going to wait for sentencing.
Okay.
I know.
Okay.
Let's start in New York, where you are, with the Bragg case.
All right, because there are three things going on today. So in New York, with the Bragg case, the judge, it's basically, we don't want to show an appearance of impropriety. We don't want to have people looking at this and saying that our decision on sentencing had anything to do with the presidential election. And also, sentencings get put off all the time. And the DA in this case, Alvin Bragg, did not oppose putting off the sentencing. So there really was no counter to this. And the judge also said, a lot's going on in this case. It's a very important date and a very important thing to sentence someone. And I don't want any other distractions during that. So, I mean, he had a lot of different considerations. And, what's the point from a judicial point of view of sentencing Trump before the election? There really is no rush.
Well, Yes, but does it not change the potential outcome if he is, say, not just former President Donald Trump, but President-elect Donald Trump when this sentencing happened? Isn't that likely to influence a decision on, say, actual prison time?
Well, I don't think that the judge would admit that, and I don't think that this judge would consider that. He is pretty much, by the book judge. He's on the straight and narrow. I don't think he would let that influence his decision. But I also don't think that there's any way that Donald Trump is going to be sentenced to prison in this hush money case. If anything, it might be a suspended sentence or something where he wears an ankle monitor. But I just highly doubt that the judge would send him to prison in any case.
We've got the E. Jean Carroll case as well, with the former president voluntarily back in the courtroom today for oral arguments. They're trying to appeal this $5 million verdict. June, what should our listeners and viewers know?
So it was a very short hearing, 10 minutes for each side, not unusual in an appellate hearing, and they kept them to that 10 minutes. The basis for Trump's appeal is some of the evidence that was submitted. There were 2 women who were allowed to testify about prior instances in which they alleged Donald Trump sexually assaulted them, and also the admission of the Access Hollywood tape. Now, at one point, one of the judges on the panel said to Trump's attorney, it really is difficult to overturn a trial judge's decision on evidence. I don't know if that will have anything to do with this. But also, the judges noticed that this is there are some novel issues here, and not just because Trump was president or anything like that, but because of the New York law that is allowing these kinds of cases to go forward after so many years, the sexual assault cases. So there are some novel issues that the court may want to consider. And as far as what E. Jean Carroll's attorney said, she said that the Access Hollywood tape was like a confession by Donald Trump, so it should be allowed to be played, and also that, the testimony of the women was well within the bounds of what the trial judge could do. And as the court said, it's very difficult to get a trial judge's decision about evidentiary matters reversed on appeal. So it's an uphill battle to begin with.
Wow. So that's 2 of the cases. Then, of course, there's the third that we got developments in yesterday, where Judge Chutkan essentially said it's an exercise in futility to try to schedule a trial before the election. So 3 strikes.
Big win, though, for the special counsel there, though, because then she decided that she's going to allow him to, as you referred to in the intro, she's going to allow him to put in this brief that will support his idea or his superseding indictment. And he has said, or someone from his office has said, that there might be new evidence in there, including grand jury transcripts and transcripts of FBI interviews with witnesses. So we're going to hear that. And that was a win for the special counsel, because Trump's attorneys wanted to file a motion of their own first.
All right, June Grosso, host of Bloomberg Law, breaking down all of these various cases for us. Thank you so much. And of course, they do have political implications, because the man we are talking about is running for president of the United States, and doing so against, of all people, a former prosecutor who has definitely tried to make that contrast clear on the campaign trail. So let's play it now to our political panel. Jeannie Shanzano, Senior Democracy Fellow with the Center of the Study of the Presidency and Congress, alongside Rick Davis, Stone Court Capital partner, both of them Bloomberg Politics contributors. So we will see if you use the words of the Harris campaign or others, Rick, the prosecutor and the felon sharing a stage on Tuesday night in the debate. He may not be seeing more trials before the election, but is he actually going to be able to avoid questions on this from moderators or from Kamala Harris herself?
Yeah, I was actually surprised that the moderators in the first debate with Joe Biden really didn't focus much on his legal problems. And so I think it's an open question as to whether or not in this instance, especially because these cases are now being in various ways being moved to post-election, whether the moderators will think that that's germane. I would say I think all of this is having some kind of conditioned effect on Donald Trump, because when I was reading, for instance, the fundraising information out of the Harris campaign this morning, she's getting a pretty good share of Republican women, first-time donors to a Democrat. And I think there's enough evidence, whether it's motivated by things like the impression women get from these cases, or whether or not it's related to, the Dobbs decision and the overturning of Roe v. Wade and all the anxiety that's existed in these states over the initiatives that have been going on, or whether you're running against the first woman potentially president of the United States. I think that Republicans have a serious problem, not just with the traditional gender gap that's always existed, but the confluence of all these things in this election cycle right now is an overwhelming weight on Republicans right now.
Jeannie, I wonder your thought on what we might hear later this month, as June was just reminding us here, and Kaylee mentioned in Judge Chutkin's case. Jack Smith is going to be able to make a filing in late September that could bring new evidence in this trial that could potentially, just by its own nature, change the way some people look at the Trump candidacy. Is that going to be our October surprise?
Yeah, it very well could be. I don't think we know yet, although I would just caution that people have been well-versed and they are very familiar with the cases, or the fact that Donald Trump is facing these cases. And let's not forget, after every indictment, even after he was convicted, his fundraising and his support went up. Now, maybe this October surprise, if we get one, would change that, but I wouldn't bet on it if I was a Democrat. What I think is important to underscore is, amidst all of this, Donald Trump spent almost an hour today literally attacking a woman that he was found guilty of sexually assaulting, and then he was found guilty of defaming her. And almost an hour of a screed on that. So when we want to talk about why women of all stripes, conservative and liberal, are tending to look again at Kamala Harris, look at who this man is. People know this. So you combine that with abortion and everything else, and that gives women another look at who this person is.
Yeah, we should note for our TV and radio audience that it was technically a civil case, so he was found liable for these things, but wasn't actually convicted of any crime. It wasn't a criminal case. But to this point, on this being a number of Trump legal pieces of news we've gotten today, we actually started our day not talking about that, but talking about a softer jobs report. Even though the unemployment rate did tick back down to 4.2%, it is looking like an economy that wasn't as strong over the last several months as maybe previously thought. Jeannie, does that need to recharacterize how Kamala Harris frames the economy she and Joe Biden have created during this administration when she speaks to the nation from that podium on Tuesday?
I don't think she'll need to reframe it. I think we've heard in the last few days where she is going to take things. She's going to try to differentiate herself from Joe Biden on certain aspects, but we have to be very clear that the unemployment rate has been low during Joe Biden's presidency, historically low by some measures, and the number of jobs created historically high, far and above what Donald Trump did his first 3 years, and certainly that last month, even though a lot of that had to do with COVID, which Democrats would tell you mismanaged. So, this remains an issue for Kamala Harris on the economy. I don't think we'll see a change from what she's been saying the last few days. She's going to try to ride down the middle and differentiate herself a bit from Joe Biden in certain aspects.
Well, Rick, the market stories that are going to come out of this week are going to be tough. They'll be loaded with superlatives. The worst week for the S&P 500 since when. That could bleed into next week. I wonder the extent to which you see the market action here. Wall Street hanging over Kamala Harris as a member of the current administration.
Well, it's not had much effect on either booing Donald Trump's numbers when he takes credit for when the market goes up. He says, they must have realized that I'm going to be president, and vice versa. He'll blame, Kamala Harris for a downturn in the economy. But we don't really see any impact in the numbers. It's been a relatively tumultuous, both positive and negative summer and in the markets, and you really don't see that kind of slide affecting the data. And so I'm going to side here with the empirical data. We have a really stable race. We know that people are focused on the economy, and we know that there's a hangover with the Biden administration related to that. And we know that there's an uplift for Trump on managing the economy. So I think the onus is on Harris in this debate on Tuesday night that we'll be broadcasting on, that she's got to make the mark on the economy. I think the real pressure is on her to bust through the ceiling that she's got on whether or not she can manage the economy better than Donald Trump.
8 p.m. Eastern Time. Tuesday, we'll meet you here. Rick and Jeannie are going to be with us. Of course, I'll be here with Kaylee, and we're going to walk you through this debate together with clutch analysis from our signature panel. We're looking forward to it. It may be the only debate. It is currently the only scheduled debate between Donald Trump and Kamala Harris. That's Rick Davis and Jeannie Shanzano, our signature panel, Bloomberg Politics contributors, with a lot more on the way. Kaylee, we're going to head to the White House coming up next to continue this conversation about politics and the economy.
Yep, Heather Boucher will be joining us on this Jobs Friday, so stick with us. There's more ahead on Bloomberg TV and radio.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. Stocks on track for their worst weekly sell-off since March of 2023. Bonds are being whipsawed as another disappointing report on the U.S. labor market revives concerns that the economy is cooling and the Fed is moving too slowly to rescue it. S&P right now down 92, 54.10, a drop there of 1.7%, just about the worst level of the day. We've got the Dow down 389 now, down by 1%. NASDAQ is down 423, down 2.5%. The NASDAQ 100 index down 2.6%. 10-year at 3.69% with a 2-year that's now yielding 3.65%. Gold down 0.9%, 24.93 the ounce, and West Texas Intermediate crude down 2.2%, 62.61 a barrel. On a down day for the U.S. stock market, Bolero shares are rallying after the operator of bowling centers reported revenue for the fourth quarter that came in above the average analyst estimate. This stock today up now by about 8.5%. And Apple's most important event of the year takes place Monday when the company will be rolling out its latest iPhones and setting the stage for a new artificial intelligence platform. Donald Trump has won a delay in his sentencing in the New York hush money criminal case until after the November 5th presidential election, giving the Republican nominee a reprieve from a potential prison term 2 weeks before voters go to the polls. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet. That's a Bloomberg Business Flash. Balance of Power continues now. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet up in New York with a look at the market reaction to this morning's job figures. Thank you so much. I'm Kaylee Lyons alongside Joe Matthew here in Washington, where it's not just market reaction to the data that matters, but political reaction as well, as we are now in the home stretch of an election. And of course, the incumbent vice president is running against former president, getting ready to join him on a debate stage on Tuesday and try to defend the economy under the administration she's been serving in for 3.5 years. And based on today's jobs data, it's an economy that's a little bit softer than previously thought.
Well, the market sure doesn't like that idea. And of course, it's not just going to be defending the state of the economy, Kaylee. They'll be projecting into what they see as their own economies if they're elected. And we've got some dribs and drabs. We spent the week talking about it. Some ideas on tax proposals, some ideas on inspiring growth, but not a complete picture. And there are a lot of questions about to what extent they'll finish painting those pictures on Tuesday. Style over substance is the headline on our story, so maybe not so much. But when it comes to substance, when we talk about the economy, there's one voice that you know well here on Bloomberg, and it's always a pleasure to bring in Heather Boushey of the White House Council of Economic Advisors. She joins us from the North Lawn of the White House. Good to see you after Chicago. Heather, thanks for joining here today. We've been obsessing over the data all day, as you have, and we see the reaction on Wall Street. There is a concern that things are slowing down more quickly than some may have thought over the course of the summer. Are they wrong?
Well, listen, we got a report today that shows that the economy continues to move forward. We continue to add jobs at a healthy pace. And importantly, we continue to see a healthy pace of wage gains for workers across the economy, including faster wage gains for the 80% of workers who are production and non-supervisory employees. So, we have a few other bright spots from today's reports. Again, yet another historic rise in the labor force participation rate of prime-age women. Labor force participation still looking quite strong, quite robust. So there's a lot of indications that this is an economy that has really reached its cruising speed, that we are moving forward, continuing a pace, and a job market that continues to perform.
Well, if it's reached cruising speed, it does raise the question of whether or not the current rate of policy is what is appropriate. I won't ask you to weigh in on the actual decision the Fed will make in a few weeks' time, Heather, from your position at the White House. I just wonder if we see a sudden easing in policy, if you worry that may actually send a signal that the economy is in a more dire strait than you think it is, especially with an election just around the corner.
Well, you know, again, I will not comment on Fed policy, but you know, we all watch all of these different kinds of data so closely, and I think you know one of the things that we continue to see is that the economy does continue to move forward at a healthy pace. We have good data on GDP growth and output. We continue to see strong consumer spending. We have seen, of course, inflation come back down, and then alongside this, we have this ongoing steady pace of job gains in the economy that continue to be associated with a healthy pace of wage gains. So when you put all of the data together, you really do have an economy that is, I'm just going to keep saying it, we've hit our cruising speed and, are moving along at a healthy pace.
I want to ask you about the revisions, Heather, and how we should read into this. 86,000 downward revision for June and July. Adding to the idea that things might be softer than the headlines suggest, should we anticipate a revision for August? And how much of this has to do with funding at BLS to get these numbers right?
Well, revisions are a part of the process. They get their data in and they revise it as they get more real-time data in from firms so that it's more accurate over time. And that is an important part. It does require that they have the resources to do the job that they need to do. Data quality, we've seen over the course of this economic recovery how imperative it is that we have access to good quality data. Listen, though, again, we saw job gains of 142,000 per month last month in August. We've seen, a steady pace even with revisions of 116,000 per month over the past 3 months. We believe that is about what we need to keep pace with the increase in the labor supply. So, even with revisions, this does look like a healthy job market, and we continue to learn, as the months go on, what the data tell us.
Well, and of course, the job market isn't monolithic. There are many different components of it that you could look at. Heather, specifically what's caught our attention in recent months is manufacturing, where a sector in which we're seeing a bit more weakness. What exactly is happening with the employment picture you see in the manufacturing sector?
Well, certainly you've seen that flatlined, and you did lose some jobs last month. One of the things that we have been focusing on in the Invest in America agenda is how the president's agenda is revitalizing parts of American manufacturing through the construction at this point of new manufacturing facilities, which we're seeing all across the country. And so we've been actually watching very carefully the increase in construction employment that you've seen, and you actually saw a big uptick in that last month. We believe that, as you build those facilities, those workers will come into these new sectors that we are building out. But, for now, we are seeing this flattening in the employment in manufacturing.
There's been a lot of talk about U.S. Steel this week, Heather. I don't know if this is something that you helped to advise the president on, but now you've got Joe Biden, along with the two presidential candidates, opposing this acquisition by Japan's Nippon Steel. It was reporting this week that President Biden was preparing imminently to formally block that deal. Is that about to happen?
That is not something I can speak to today.
Well, I don't know if you're allowed to talk about this proposal at all, but there have been questions about whether, if this deal wins support, for instance, from the United Steelworkers Union, if that might change the look of this arrangement. Do you have a thought on that?
Well, listen, to sort of zoom out to the big picture here, the president has been focused, and the vice president, from day one, on making sure that we have the economic sectors in our economy, across our economy, that are vital to our national and economic security. And the president's been focused on making sure that we're making those investments, that we're making sure to create good jobs as we do so. And I think that, he is taking on these decisions in light of those overarching goals.
Well, of course, he has a few months to still make those decisions before a potential new administration would take over. Heather, have there been conversations within the Council of Economic Advisors as to what kind of economy in January you expect the next president will inherit, and to what extent is that dependent on some kind of monetary policy change having kicked in? I won't ask you to give me a number on the number of basis points you think the rate, Fed funds rate, might be lower, but what will that have done over the course of the next several months by January?
Well, here's what I think, right? As we've all talked on our team about where the economy is, the consensus really is that this is an economy that just is kept on moving forward. And so obviously things can happen that can move us off track, but on the path we are on, we are on target to deliver an economy for the incoming administration that is strong, where the fundamentals are strong, and where we continue to see low unemployment and strong wage growth. So, and that is on top of the other indicators that we've seen with, prices coming back down, with, growth overall and consumption remaining at good levels. So I think that, we have achieved this strong, robust recovery that the president set out to do when he came into office.
All right, Heather Boucher of the White House Council of Economic Advisors joining us from the White House North Lawn this afternoon. Thank you so much, Heather. Enjoy the weekend. Always great to have you here on Bloomberg TV and radio as we analyze the actual economic picture here. Of course, the White House is doing that. Economists are doing that, and frankly, traders are doing that as well. And you're seeing that showing up in financial markets today. It has not been a good week if you are long equities. In fact, we're on track for the worst week for the S&P 500 going back to March of 2023. And I would just remind everyone, that's when we were seeing regional banks.
That's correct.
Collapse.
That's when we started doing this together.
Yeah.
And by God, it's been 4 days. This is a shortened week coming up. September is fulfilling its reputation. At this point, the S&P is down almost 2%, 2.5% for the NASDAQ, Kaylee. And we've been watching the Russell. This has been a big part of the story about this apparent rotation. The Russell is pretty down hard, too, down more than 1.5%. And looking at the IWM, $208 a share here. This has changed a lot in just the last couple of weeks.
Yeah, indeed it has. And of course, the equity market is one thing. The bond market is another entirely. And you're seeing that reaction today, too. We're down 9 basis points on the 2-year yield. That is the lowest in almost 2 full years since September of 2022.
243. Abigail Doolittle is watching this for us, as always, in New York, reporting on the markets for Bloomberg and with us right now. How bad this is going to look at 4 o'clock, Abigail?
It will probably look as bad as it looks right now. It's unlikely that in the last 10 or 30 minutes of trading that we get some sort of a rebound rally, just given that it's a Friday. And while we're out of the unofficial part of summer, we are, ahead of a weekend. I don't think that you're going to see traders with so many uncertain factors on the horizon changing their bets right now. But especially if we just stick with those weekly losses, as you and Kelly were just talking about, the worst week of the year for the S&P 500, the NASDAQ. The real culprit here, the chip stocks, the NVIDIAs, the Broadcoms, the super micro computers, the SOX, the index that measures the chips, on the week, down 12.3%. That's the worst week since March of 2020. That's the degree of the selling power I think that we are seeing here. Not that I think we're seeing here. We are seeing here. What I think is behind it, Kelly, you just mentioning those moves for bonds, yields, that 2-year yield down 9 basis points, really shaking up the curve there. But it's also shaking up the dollar yen. That dollar yen heading to its worst week since the first week of August. That, of course, was that culmination of that first round. And I do say first round because for a while it has looked like there was going to be another wave of the unwind of the yen carry trade. The reason that connects to these risk assets in the U.S., it created a lot of cheap money that traders in the U.S. could use here to put into the NVIDIAs, the Broadcoms, the cryptos of the world. Now that that haven yen is strengthening, whatever the cause, because it's a haven, or maybe bad assets, the Japanese banks, or just too far, too fast to the downside for that yen, we're seeing the reversal, and that's really very painful for a lot of these tech stocks in particular.
You mentioned Broadcom, Abigail, important here in that latest dose of earnings that give traders concerns about the future of AI.
It really does. I think it probably moderates the pace of the AI craze. So similar to NVIDIA, although a little bit different in the fact that NVIDIA's guidance was a little bit better than what had been expected, just not a blowout. Broadcom, another company involved in AI, interestingly enough, their AI business was very strong. But in terms of the fourth quarter, the current quarter, they guided to $14 billion. That's a little bit less than what the street was looking for. And it was more their legacy business that weighed there. But the stock, even though it wasn't up the 180% plus year to date, as was NVIDIA at one point just a couple of months ago, it was up a healthy chunk, too far, too fast. Investors wanted perfection. They didn't even get a meet here. So this stock really down almost 10%. It's that sentiment. I'm glad you brought that up, Joe, because it's that sentiment in addition to the strengthening of the yen that's weighing.
All right, Bloomberg's Abigail Doolittle, Chief Markets Correspondent for us here on Bloomberg TV and Radio. Thank you so much for joining us on this very down Friday. down Jobs Friday, that is, for the markets. And it's happening, I would note, on above average volume. We're up volume about 20% above the 20-day average on both the NASDAQ 100 and S&P 500. So there is a lot of force behind the selling we're seeing today. And my question is, Joe, obviously we knew that this was going to be an incredibly important jobs report. But given how you can kind of read it as you wish, if you want to look at the soft payrolls or the lower unemployment rate, I wonder if that actually makes next week's CPI report more important than we thought it might be.
This keeps happening.
On informing.
And then the next
decision
data
of the
point
Federal
is the
Reserve.
most important one of our
We
lives.
just
and
keep moving the chains.
That's where we are. Although once we get to the Fed meeting, 17th, 18th, right?
That's correct.
Then it will all be in the can, and we'll have to wait here. Is it 25 or 50? We'll figure this out. I'm guessing Tim and Emily talk about this ahead on Bloomberg
Oh, I'm
Business
sure they will. And of course, we're going to have much more in the late edition of Balance of Power coming up at 5 p.m. We'll have more from the White House with Jared Bernstein, the chair of the White House Council of Economic Advisors. So come back and join us then on Bloomberg TV and radio.
Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
And a very good afternoon, everyone. Live on Bloomberg TV, radio, YouTube, and Bloomberg Originals. It is Bloomberg Business Week. I'm Tim Stenevec in the Bloomberg studio here in New York City, joined not by Carol Masser, who is out on vacation this week, but Bloomberg News cross-asset reporter Emily Griffeo, who is filling her seat this week. Emily, we got a sell-off.
We really do. We're actually poised for the worst week since March 2023 in the S&P 500. So we'll see how that plays out over the next 2 hours.
Yeah, as a reminder, that was when we saw the regional bank crisis. We're going to have much more on the markets throughout our program today. Bonds are whipsawing. Another disappointing report on the U.S. labor market, reviving concerns that the economy is cooling and the Fed is moving too slow to rescue it. We got a great roundtable coming up on that. We got Michael McKee, as well as FHN senior economist Sophia Carney-Letterman, and Manpower Group President Becky Frankowitz, all coming up over the next hour.
Also, the latest from the Bloomberg New Morning Consult polling of swing state voters, which candidates' tax proposals they favor. And, quote, she's not just a pop star. We'll tell you about the latest addition to the Bloomberg Billionaires Index.
All that and more over the next hour on Bloomberg Business Week. First up, though, a check on the day's trade and top business stories. Here's Charlie Pellet.
I thank you very much, Tim and Emily. A brutal day for the U.S. stock market, at least for the bulls, with the Dow, the S&P, NASDAQ. We are holding close to session lows right now. An 88-point drop on the S&P 500 index. That index now at 54.14, down 1.6%. We've got the Dow lower by 355 points, down 0.9%. NASDAQ, though, hard hit, down 2.4%. The NASDAQ 100 index down 2.5%. For the NASDAQ 100, a drop now of 479 points. 10-year, 3.71%. The 2-year, 3.66%. Gold down $21 the ounce to $24.95, down 0.8%. And West Texas Intermediate crude oil slumping 2.2%, 67.66 for a barrel of WTI. All major groups in the S&P 500 index are retreating. Losses led by the index's most influential group, and that is technology. For the week right now, we are looking at a loss on the S&P of 4.2%. Broadcom, a chip supplier for Apple and other big tech companies, plunging today after the company delivered a disappointing sales forecast, hurt by the parts of its business that are not tied to artificial intelligence. Shares of Broadcom down 9.5%. Other chip companies lower as well. NVIDIA down 4.5%. Advanced Micro Devices down by 4.2%. So again, the Dow, the S&P, and NASDAQ all declining. Donald Trump has won a delay to his sentencing in the New York hush money criminal case until after the November 5th presidential election, giving the Republican nominee a reprieve from a potential prison term weeks before voters go to the polls. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, as we heard, U.S. hiring falling short of forecast in August, downward revisions to the prior 2 months, a development likely to fuel ongoing debate over how much the Fed should cut interest rates. Here are the numbers. Non-farm payrolls rising by 142,000 last month. The 3-month average is at the lowest since mid-2020. The unemployment rate, though, edged down to 4.2%. It's the first decline in 5 months, reflecting a reversal in temporary layoffs. In remarks after the release of the jobs numbers, Fed Governor Chris Waller said the latest batch of data, quote, requires action, adding that he would advocate for front-loading rate cuts if that is appropriate. We got a great roundtable on what you need to know about the latest data and what it means for the Fed and the economy. We got with us in the Bloomberg studio Michael McKee. He's Bloomberg News international economics and policy correspondent. Also, Sophia Carney-Letterman, senior economist for FHN. She joins us from New York. Mike, as you reminded us yesterday, this was the most important payrolls report since the last payrolls report. It did come in shy of the median forecast in that Bloomberg survey of forecasters. Does front-loading rate cuts mean 50 basis points in September?
I don't think so.
Okay.
I think what Chris Waller was saying is that he's open to doing more in later meetings if the data come in that way, because there's not a lot of data between now and September 18th that would convince you one way or another. So I think the Fed's default is 25 basis points. The numbers came out today without giving you any reason to really move away from that. And so because we're not getting any strong signals of 50 at this point, I think that 25 is probably the best guess.
Sophia, let's bring you in here. What's your reaction to the jobs report, and do you still think that the Fed will only cut 25 basis points?
Yeah, thanks so much for having me. I got to totally agree. You know, we are still in the 25 basis point camp. You know, that's sort of what the Fed has been teeing up. And I think exactly what you heard from Waller this morning suggested that should subsequent data, that's the term that he used, he said if subsequent data shows increased weakness in the labor market, he'd be prepared to make a bigger cut. But to us, that suggests that that means future employment reports, if you see either further weakening, that might encourage the Fed to go more than 25. So we are looking at 25 basis points in September. That's what we thought before this employment report today, and that's what we still think we'll expect to see in a couple of weeks from the Fed.
Hey, Mike, help us understand the unemployment rate going down. What exactly does that reflect in the month of August?
Well, it's sort of a payback for what we saw in July, where it went up because a number of things reversed themselves. We had a much smaller rise in the labor force. We had more people hired than were let go in the household survey. We also saw things like the number of people who were on temporary layoff, which had boomed in July and contributed to the rise in the unemployment rate. That fell back. So you'd say this was a decline for all the right reasons, and it's one reason that the Fed doesn't feel a sense of urgency about this, because it's not suggesting that all of a sudden people are losing a lot of jobs, companies are getting rid of people. This really tracks with what we saw in the Beige Book of companies aren't hiring, but they're not firing people either.
So then, Mike, how do you square the reaction that we're seeing in the bond market with yields falling off, traders pricing in for that 50 basis point cut in September?
Well, they're not really pricing 50 anymore. They've kind of moved it back down to 25, because I think the reality is set in that the Fed is not setting us up for 50. But we are seeing yields fall because basically you've had confirmation not only in the numbers, but in what Waller and John Williams have said, joining the crowd of people who've said we're going to cut rates at the next meeting. So you're seeing that reaction there, and people are anticipating that the Fed is going to be moving the short end lower, and that's caused the yield curve to uninvert. We'll see if it stays that way, but at this point it's kind of a natural reaction. I don't know why equities are doing what they're doing, but you're the person who covers that. If you can ever explain to me why stocks do what they do.
Well, fortunately, Abigail Doolittle's coming in just a few minutes, and she's going to help explain the equity market reaction. Sophia, I do want to go back to you to get an understanding of what type of data we could see maybe over the next few weeks to change your view that the Fed, well, actually in less than 2 weeks, could cut rates by more than 25 basis points. What would you need to see? What would the Fed need to see to convince them between now and then?
You know, I don't think that there's really that much time and that much data that's going to come out in the next 2 weeks that really could necessarily push the needle. I mean, the really big thing would be next Wednesday's CPI report, right? I don't think that you're going to see anything really unexpected there. I think you're going to continue to see progress towards 2% inflation that we've been seeing. And so that I think won't be something that could push the needle. If there was an incredible upward surprise in inflation, maybe. But I don't think so, right? I think between now and the September 18th meeting, we kind of have the majority of the data. And then you also factor in, the Fed's blackout period starts tonight. So we won't hear comments from any Fed officials. And we've heard from the Powell Fed for this whole tightening cycle that they've been very communicative ahead of time. And so I don't think they would want to surprise markets. So we don't have a ton more data. That being said, I think the further meetings, the November, the December, it totally becomes data dependent. And a lot of it's going to be that focus on the employment side, right? The employment report is yet again, like it used to be pre-pandemic, the big market driver. Inflation has sort of fallen to the wayside now that it's doing what it's supposed to do.
Well, we may not be getting a lot of data between now and then, but we're at least getting quite a few Fed speakers today. Federal Reserve Bank of New York President John Williams said it's now appropriate for the Fed to reduce interest rates, given progress on lowering inflation and a cooling in the labor market. Here's what he said in a speech prepared for an event held by the Council on Foreign Relations in New York.
The
current restrictive stance of monetary policy has been effective in restoring balance to the economy and in bringing inflation down. With the economy now in equipoise and inflation on a path to 2%, it is now appropriate to dial down the degree of restrictiveness in the stance of policy by reducing the target range for the federal funds rate.
Okay, that was Federal Reserve Bank of New York President John Williams. Equipoise, Mike McKee. We're always parsing the words that we hear from Jay Powell and other Federal Reserve officials. This is one that I haven't heard.
He's just showing off.
Okay.
I mean,
it's like a SAT
it's
test?
arriving in the sports car and spinning around as you arrive. Equipoise basically means in balance, and he's talking about the labor market and inflation are in balance now. So we're in equipoise. It's not even what I would call Fed or economics nerd word or code word. It's just a fancy way of saying in balance.
So don't read too much into it?
Don't read too much into it. I think he just wanted to be clever and get some attention and have people like you ask what equipoise
Well, I was going to say, Emily, it's working because I'm talking about it.
Yeah, exactly. I'm impressed.
Thank you. Hey, go ahead, Emily. I know you're going to ask a question.
Oh, well, I wanted to pivot to the inflation report because now we have this, I guess, signal that the Fed isn't as focused on that part of their mandate. So then how, Mike, are you thinking about the data that we're going to get next week on inflation? Does it move the needle at all?
Doesn't move the needle. I think Sophie's right that at this point, when you look at what's forecast, it's basically no change from what we saw in July. Headline goes down some on base effects, but it doesn't tell you that things are getting worse. And all of the Fed officials who've spoken recently, including Waller and Williams today, say we don't think we're going to get inflation out of the labor market. So at this point, it's just kind of confirming that they can go ahead with what they're doing. And I think we move away from it being the indicator every month. We'll stick with jobs. I'll see you guys October 4th. But it's not going to be inflation unless there's some sort of surprise, especially with oil prices going down now. Who knows?
Hey, Sophia, I want to give you the last word here. Is it fair for Jay Powell to declare victory at this point? Is this a soft landing? Has the plane been landed?
Ooh, that's a tough question. I think it's too soon to declare victory, but I do think the window for a soft landing is there. We are definitely slowing. The U.S. economy is definitely slowing, right? Hiring is slowing. But sort of what John Williams said, right? Reducing the restriction right now is definitely the right thing to do, with Waller saying as well. So I think it's too soon to take a victory lap, but I think they can still hold their breath, and maybe they can.
All right. A big thank you to both of you. Michael McKee, Bloomberg News International Economics and Policy Correspondent here in our studio. Sophia Carney-Letterman, Senior Economist over at FHN. Well, that's the macro and the data. Let's get to the market reaction. We're going to bring in Abigail Doolittle, Bloomberg News Chief Markets Correspondent. She joins us here in the Bloomberg Business Week studio. Never a good thing to hear if you're long this market. It's the worst week since the regional bank crisis of 2023. Is the reaction in the equity market that we're seeing today a result of the jobs report that we got this morning?
I think it's a piece of it. It's interesting to see that bad news is being treated as bad news here, but I think that the bigger piece is that the jobs report really sent yields lower, especially that 2-year yield. In turn, that sent the dollar-yen lower, or the yen higher, I should say. And so we have the dollar-yen almost as close to the low that it had in the early August at the culmination of that wave of the yen carry trade unwind. I think we've been talking about this for a few weeks now. I think that we are likely to see another wave of that unwind, probably to take the dollar-yen to about 130. If that should happen, and the reason that today stocks are pressured by it and have been, because the dollar-yen right now down more close to 3% on the week, the worst week since early August. Basically, that floods, that carry trade puts a lot of cheap money into the system where traders and investors here in the U.S. can buy the NVIDIAs and send it up 180% on the year. Chewy.com on the picture of a puppy, a cartoon puppy, can send it up intraday 40%, can send crypto higher. But when that cheap money comes out, then you really have to look at the actual valuation and the fundamentals. That's a piece of what's happening today. Plus the sentiment around Broadcom and that guide not quite meeting, that's really hitting big tech.
But it was interesting because earlier in the year, it did seem like not so much the speculative, the crypto names, the meme stocks, but these big mega cap technology stocks were seen by some investors as a safe haven. If nothing else is working, just pile into NVIDIA and you'll be fine, because this, demand for AI is really going to carry the market over the next few years. What do you make of the fact that today we have the NASDAQ 100 down 2.6%, almost 2.7%?
Well, this is going to date me, but I started really on a trading floor in earnest during the tech bubble. So the idea that big tech was ever safety, when that was the buzzwords in the pandemic, it was very baffling to me. I mean, you could make the case just because of the cash piles and how well known their names are, but in terms of the valuation, it's really not the traditional idea of safety. And which push comes to shove, any stock on a year-to-date basis that's, the year's only, in its 9th month, was up more than 100%. That's not safe no matter what they're doing. I think, though, tied into that is expectations in terms of growth for NVIDIA in particular, just because they put out blowout quarter after blowout guide. I mean, that first blowout guide where it's 50% better last May almost fell out of my chair. I've never seen anything like that for a big cap tech company. But they really set the stage for those high expectations. We were all waiting to see when the music would stop. And it really happened last week. It was a good quarter. It was a good guide, but not great. And sequentially, revenue down more than 50%.
It's maybe a good segue to talk about the stocks down another 4.7% today. Just in the last 4 days, I'm counting this week as 4 days, the holiday shortened trading week, down more than 12%.
Yes.
Yes, a lot of that has to do with NVIDIA, but what else are you reading into there?
Well, it's the worst week since March 2020. That was basically the bottom week for the stocks then. So that's the degree of the selling power. That week, it wasn't down all that much more. It was down about 16%. So this tells you investors are quickly exiting these stocks. Now, the thing about a stock like NVIDIA or even Broadcom, quite frankly, if last week you heard that quarter and you're like, oh my gosh, they didn't guide up revenues by 25 or 50%, I'm going to get out, and you have a big position, you don't get out in one day. It takes a while. Especially if this is one of the most widely owned stocks. You have a lot of different investors saying that it could put a lot of pressure on the market for a while. In the way that Apple, when Warren Buffett, Berkshire Hathaway started selling early last December, that stock was down steadily from December until April, and you could really feel the pressure. We didn't know for sure that it was Berkshire Hathaway, but it turned out that they really did pare back that stake, even though it's still their largest holding. But that's the kind of selling. And speaking of Berkshire Hathaway, this cannot be underemphasized. They are not market timers, but they are in 45% cash as of their last reported quarter. There's a reason for that.
Okay.
They are seeing signals that they want their portfolio in cash. Yes, you can make the case they're
cash
getting
because they're on the sidelines for opportunities in the near future.
Well,
because
we
they've been
could
cash for,
say that.
They've had a lot of cash for a while.
They've had a lot of cash for a while, but the fact that they have 45% cash now, almost 50% of their portfolio is just sitting on the sidelines.
Maybe Warren Buffett's
They may
close
not
to
be market
retirement.
timers.
Maybe he's close to retirement and he wants his portfolio more cash.
They may not be market timers, but it's pretty darn good timing.
They're not the only ones. Our own Katie Greifeld actually had a story today about how BlackRock is dialing back risk across its $131 billion model portfolios. So they're still in equities, but they were pulling off the risk as well.
There are signals. I mean, one of them being that we had that most inverted yield curve ever. I mean, a recession follows that. The Bloomberg Commodity Index last year, a lot of people didn't pay attention to this, but it was down even though you had stocks higher. They're both different silos within or segments of the risk asset silo, and it could have signaled a soft recession. I think we're starting to see some of those fears come to roost today.
Abigail Doolittle, Bloomberg News chief markets correspondent here in our Bloomberg studio. Taking a look at equities, a little over 90 minutes, the end of trading on this Friday. The S&P down 1.7%, the NASDAQ composite.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg Jobs Friday. We've got stocks at just about the worst level of the day. Another move lower with the S&P now at 54.05, a drop now of 98 points on the S&P. That is a decline of 1.8%. The Dow is down 423 points. Jobs Friday, a drop there of 1%. The real damage, though, tech stocks. NASDAQ down 450, a decline right now of 2.6%. The NASDAQ 100 index down 2.7%. 10-year yield, 3.70%, with the 2-year 3.64%. Gold down $22 the ounce. Spot gold now at $24.93, a decline of 0.9%, and a 2% drop now for West Texas Intermediate crude, $67.72 a barrel. Stocks on track for their worst weekly sell-off since March of 2023. Bonds whipsawed as another disappointing report on the U.S. labor market revived concerns that the economy is cooling and the Federal Reserve is moving too slowly to rescue it. Again, the S&P right now down by 1.8%. On a down day for the stock market, Bolero shares are surging 7.8%. The operator of bowling centers reported a revenue for the fourth quarter that came in above the average analyst estimate. Apple's most important event of the year takes place Monday, when the company will be rolling out its latest iPhones. And Donald Trump has won a delay to his sentencing in the New York hush money criminal case until after the presidential election, giving the Republican nominee a reprieve from a potential prison term weeks before voters go to the polls. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thanks so much, Charlie. Do appreciate that update. Well, we are all in on the implications of this morning's payrolls number. Non-farm payrolls rising by 142,000 last month, the 3-month average at the lowest going back to mid-2020. That unemployment rate did edge down, though, to 4.2%. It was the first decline in 5 months, reflecting a reversal in temporary layoffs. Somebody who's got a great view of the labor market is Becky Frankowitz. She's Chief Commercial Officer and President North America over at Manpower Group. It's a company that sources and manages talent and it manages employees for more than 400,000 clients. Becky joins us from Milwaukee. Becky, hiring was weighed down by job losses in manufacturing, retail trade, information, education and healthcare boosted headcount by the least since going back to 2022. Does this match what you're seeing at Manpower Group?
Yeah, so I'd say, Tim, it's another example of what we're calling the great waiting game. We have employers waiting to do big hiring until they see some proof of economic improvement. And we see employees waiting to change jobs because the quit rate held, waiting to change jobs until they get proof that the economy is proving. And so both sides have a waiting game. The other thing I would say is this, while it's less than we expected, Tim, this isn't a bad report. With the revisions in July, month over month, it's an improvement. It's definitely not a blockbuster, but I would say another indication of everyone's just holding. It's quite stable out there.
You talk about this waiting game. What would be the catalyst that would then propel employers to start hiring more extensively than they are right now?
Emily, I ask that all the time to leaders across our country, and I hear two things. One, the Fed's decision in September is pivotal. Very, very important to employers to give them a proof point, not a forecast, not a suggestion of improvement, but a proof point that things are going to improve. So that's important. And we're also increasingly hearing companies, wanting to wait and see what happens with the presidential election. So I would say on the employer side, definitely in the first position is the Fed decision in September.
What are companies waiting for with the presidential election? I.e., what decisions are they holding off on? And how would a Harris administration differ from a Trump administration in terms of how they're thinking about hiring?
Yes, the second part of that's not my area of expertise, but I definitely can address the first part of it in terms of why are they waiting on this? It is another signal of uncertainty to, American companies. They want to know what is going to happen in the future. They want to answer the question you're asking, how is this going to look different under either administration? But this holding spending on the sidelines, Tim, isn't new. We've seen capital expenditures really being held, waiting for big tech investments. I would say now we're starting to see see, the surprise. I like to look at the good in the report, the surprise in the report, and the watchouts. The good in the report is relatively steady. Unemployment, wages, workforce participation, a little movement, but relatively steady. The surprise is the way work is getting done is changing. Now, is this long-term, short-term? I don't know, but I can tell you that those working or holding part-time jobs increased to 7.9%. It's the highest percentage we've had since October of 2021. And back to your question on what are employers waiting on, they're looking for flexibility while they're waiting. And so they're looking for part-time workers, bringing in new talent, those who are retired, those who are doing caregiving and need flexibility. And employees also waiting, as mentioned, they're looking for some reassurance in their income. And they're also looking for flexibility. So that was one of the surprises in this report that hasn't really been talked about. And I have a few others.
So, Becky, when I look at the gains in this report for wages, we saw pay gains beat forecast, average hourly earnings rising 0.4% compared with a 0.3% median estimate. From your view, do you feel like workers feel like those wage increases are enough? Is that helping them kind of combat higher interest rates and higher inflation? Do they feel like they are seeing those wages kind of keep up with the rise in inflation?
Yeah, Emily, the answer to that is definitely not. But again, that's not new. So when you hear me saying stability, it's also stability of mindset, like 0.4% versus 0.3%. When we're looking at, inflation starting to level off, we're still seeing that talent is sitting tight. They're a little anxious about making any big moves. Again, they're waiting as well. But we've seen a real change in wage composition. So during the crisis, we were paying significant increases for people who would change jobs. In fact, it hit about 16% increase versus on average at the time, it was about 7% for job stayers. Now we're seeing it back to pre-pandemic levels where we're seeing job stayers get anywhere from 3 to 5% and job movers get anywhere from 6-8%. And so that's really stabilized as well. And so we're not really incenting people to make moves, whether it's through wages or whether it's through new job offers.
The Fed certainly likes to see data like that, Becky, because it means that wages aren't going up and it means that it's, Fed friendly in terms of inflation. I do wonder about what other normalization you're seeing at Manpower Group, because this idea of this imbalance that has been here in the wake of COVID, I think is still there in a lot of different places. Where else are you seeing a normalization?
Yeah, Tim, I just had this discussion yesterday with one of the big CEOs in our country, and asked me the question from an employer angle, which is, hey, is talent shortage gone? Is it stabilizing? Talent shortage is still here and likely will extend and expand as we start seeing those investments come off the sidelines, mainly into tech. And, all companies are tech companies. I'm not just talking about the Googles and the Microsofts of the world. The number one hire of AI and those kind of skills is actually a bank in Capital One. And so all companies are tech companies. But what we're seeing is there's this pent-up demand for these specialty skills. And right now, employers are moving talent around to fill gaps versus bringing in those net new skills. And so talent shortage is here, and it's going to even, be a bigger consideration as we go forward as we see those tech investments happen. And the need for skills that we've been talking about for years now, or a year and a half at least, those will actually come to reality.
Well, what are those skills that are actually needed? Because we've been having this discussion quite a bit over the last few months about the role that AI will play in this, and the idea that, okay, well, people who were told to go learn to code, some of those folks might be out of a job because these LLMs can do a pretty good job coding themselves. What are you seeing as the jobs that will actually be needed in the coming years?
Yeah, so Tim, you asked me in the right horizon the coming years. I don't see, business developers, coders, they're still in the top 3 jobs open in the country today, software developers. That's still a very important skill. As you look out and AI starts to take hold, it's less than 2% of total jobs in demand, by the way, AI machine learning jobs in the country today. But as we look out, it will accelerate. And those, the skills around capability for analytical assessment, the neatest one, I think, of these prompt engineers, because basically that's a fancy word for saying ask the computer the right question in the right way. And so this idea around natural language models and how do I ask a question, those will be very accessible jobs. which, to your point, for the coders, they're not going away tomorrow. They'll evolve into something as well. But I think the accessibility of tech will really come into play as we look across the horizon. But I think the other kind of interesting thing that we're seeing as we go through the summer is you heard me talk before about this cost-conscious consumer that's really driving consumption in our country. What we saw and what we're seeing in real time, we saw it starting with the jobs report, but we see what's happening today. We're seeing really a decline in those retail segments. Big hirers, great clips that I talk about frequently. Walmart starting to see decline in their open jobs. And at the same time, we're seeing an increase now in registered nurses, which has been depressed, but also in mental health support. So we're seeing new entrants in the top 25 hirers. A company, honestly, I hadn't heard of called LifeStance has now moved into the top 25 hirers, and it's a mental health support company. So we're seeing a change in the composition, yes, on the specialized skills that you ask about, but also on the general skills in the economy today, which is, good news.
I actually did want to talk a little bit more about the composition of what kinds of jobs are being added. When you look at the jobs report that we just got, job growth was led by construction and healthcare, while manufacturing jobs saw declines. And I wanted to know, what does that tell you about the trajectory of the U.S. economy?
Yeah, so, I said I like to talk about the good, the surprise, and the watch-outs. My number one watch-out, Emily, is what's happening in manufacturing. Specifically, we saw what the numbers were on durable goods. That was down. That has broad-reaching supply chain considerations. So that's one of my watch-outs. I am pleased to see the resurgence of health. Again, registered nurses have been quite volatile coming out of the crisis. In fact, a lot of declines. Now, not net declines, but declines month over month, given the surge in demand. We're seeing that start to come back. And again, there's a whole new segment of healthcare that's truly emerging, which is mental health support, which really, truly gave birth coming out of the crisis.
Before we let you go, Becky, we have about a minute left. Are we in a recession or approaching a recession?
I don't believe that. I believe we're in a bit of an air pocket. We get encouraged, and then we hit an air pocket and we come back down a little bit. And so I do not believe we're heading into a recession. We're also not heading into a resurgence, Tim. And so I think we're going to see a bit of steady as she goes. I'll also be watching what the Fed does mid-September in hopes that jumpstarts some of the spending that's on the sidelines.
Are we heading into a normalization?
I would say right now the indications are we're heading into a fairly steady state. With these levels, I don't know if anyone would call that normalization, but I would say we're not seeing big surges or, again, big layoffs either. We're seeing fairly steadiness at every corner.
Okay, steady as she goes. Becky Frankowitz, she is Chief Commercial Officer and President North America over at Manpower Group. Reminder, they source and manage employees for more than 400,000 clients. So we always like to check in with her on these payrolls day because they have a great view of what's going on around the country when it comes to hiring and firing. The S&P 500 down 1.8%. Tech, though, is down 2.6%. The NASDAQ Composite, the Dow, down a little more than 1%. Coming up next, we're talking money, specifically, and polling, specifically what the polling says about which candidates' proposals about your money are resonating with swing state voters. That's next on Business Week.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got stocks very much in the red, on track for a loss on the S&P of more than 4.5% as of now. Right now, the S&P stands at 5405. Jobs Friday down 98, dropped right now of 1.8%. Dow Industrials are slumping 440, a decline of 1.1%. Nasdaq down 2.6%. The Nasdaq 100 index now trading lower by 2.7%. 10-year 3.70% with a 2-year at 3.64%. Gold down $22 the ounce to $24.94, a drop for the precious metal of 0.9%. West Texas Intermediate crude 67.82 a barrel, lower now by 1.9%. Boeing shares lower, down 3.1%. Boeing is seeking to avert a crippling strike by its largest union. As the clock runs out on the existing accord, rank-and-file workers will vote twice on September 12th, once for whether to accept the Boeing offer and then on whether to strike. Donald Trump has won a delay to his sentencing in the New York hush money criminal case until after the November 5th presidential election, giving the Republican nominee a reprieve from a potential prison term weeks before voters go to the polls. Again, recapping, stocks lower, S&P down now by 1.8%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Hey, thanks for the update, Charlie Pellet. Do appreciate it. Well, former President Donald Trump's proposals for a targeted tax break are resonating with battleground state voters who overwhelmingly approve of his ideas to eliminate taxes on tipped income and retirement benefits. But Vice President Kamala Harris has countered Trump's proposals with her own no taxes on tips plan, along with other tax cut ideas. It's coincided with her gaining voters' trust on economic issues. That's according to a Bloomberg News Morning Consult poll in the 7 states most likely to decide the election. For more, we turn to Laura Davison, politics reporter at Bloomberg News. She joins us from our Washington, D.C. bureau. Laura, what did this poll reveal about who is responding to the candidates' proposals? Like, who do we know is responding to these?
So we know that the majority of people in swing states, this no tax on tips idea, which both Harris and Trump have embraced, about 70% of people like this idea. That's a kind of number that you rarely see, for any sort of policy, having that level of bipartisan support. Same with Trump's no tax on Social Security. That's even more popular, well north of 70%. Other ideas like a child tax credit, both Harris and Trump have put out versions that are slightly different, but that's really popular among Democrats, a little less so among Republicans. But all these tax cut ideas that the campaigns are putting out generally tend to be quite popular heading into 2025. No matter who wins the White House, there's going to be a big tax fight in Washington because going back to 2017, the tax law Trump passed then, that expires. So this opens up the whole tax code for negotiation in Congress next year.
Well, you bring up a good word, which is negotiation here. And I think that's such an important caveat that we have here. Just because a candidate says this on the campaign trail doesn't necessarily mean it becomes law when that candidate is sworn in on January 20th, 2025, right?
Yes, correct. Any sort of tax policy requires Congress to approve it. And Congress could very well be split next year. Republicans right now have the advantage to win the Senate. Democrats have the advantage to win the House. So no matter who wins, they could be dealing with a mixed Congress, which means that they're going to have to negotiate. And some of these really big ideas, for Republicans, they want to just completely extend the Trump tax cuts. That's probably out the window. And things that Democrats want to do in terms of a much bigger child tax credit, Harris's idea for a $25,000 first-time homebuyer assistance, that's probably also off the table.
I want to point out that in this Bloomberg poll, the questions, and correct me if I'm wrong on this, did not identify which presidential candidate was proposing which policy. And also the list of proposals was rotated. So neither candidate's policies got an advantage. So the respondents to the survey were purely just responding to the policy proposals. Something that stood out to me was that when you look at both Trump no tax on tips proposal and the Harris one, the Harris voters and Trump voters all seemed pretty equally in agreement that they would support both of these. What do you make of that, and what are the differences between the two candidates' policies on no tax on tips?
Yeah, so their policies are pretty similar. Harris has a couple modifications that shrink it a little bit. So her policy would still apply payroll taxes to tipped income, so instead of just income taxes. So there would be still a little bit of tax on that at the federal level, as well as Harris's proposal would just apply to service workers. She just wants that for people working in restaurants. Trump's would apply to anyone who earns tips, and that's something that economists have flagged as potentially an issue of people would reclassify their wage income as tipped income in order to get the tax break. But what it shows that the polling is really close. When Republicans, Democrats, when they were looking at these two proposals, just a couple of points here and there, which shows that this is a popular idea. Kind of, however, the details shake out on it.
Okay, well, one idea that, according to the Bloomberg News Morning Consult poll, is not as popular is this idea to give $25,000 in assistance to first-time home buyers. This was a recent policy proposal from Vice President Kamala Harris. What do we learn from the poll about how people responded to that idea?
Yeah, that's an idea that was much more popular with Democrats than Republicans, and this you see a lot more partisan split there. Rather, what was interesting though is that the poll also showed that Harris and her trust among voters on housing costs has shot up since she joined the ticket. So that was an issue that Biden always lagged Trump. Now Harris is ahead of Trump on that issue. So even though this idea isn't maybe as universally popular as some of these other things, it's clearly helping her pull ahead in terms of trust issues. Even on the economy, this is an issue where Biden had totally flagged, and now Harris is not beating Trump, but she's almost built into to his lead there.
And what about when it comes to Trump's Social Security tax proposals? I'm seeing here 83% of Trump voters said that they would support that, and 79% of Harris voters said they would support, meaning strongly support or somewhat support.
Yeah, so that is an incredibly high amount of support. If you look at people, above the age of 65, it increases to 9 in 10 support the idea. I can tell you that in American politics, 9 in 10 people don't agree on anything. So this is almost as popular as you can get in terms of a political policy idea.
But could this actually get through Congress? Right. I mean, everyone would like to pay less in taxes, but the fact is taxes are needed, most people would agree, to pay for government services and pay for the government, pay for the military, pay for defense. I could go on. Where would tax money come from if these taxes were cut?
So if you ask the Harris campaign, they say they want to pay for some of these tax cuts by increasing taxes on the wealthy and corporations. Harris has talked about increasing the corporate rate to 28%, also increasing capital gains taxes. Trump has been a lot more squishy on what he would do. He said that economic growth would pay for this, that increasing energy production would pay for it, even tariffs could pay for it. But when you look at the dollars and cents, these are really hard decisions that Congress would need to make to have some of these really big tax cuts go into effect. We already have a running deficits. Both Republicans and Democrats say they don't like these deficits and want to curb those back. However, if you want to keep introducing tax cuts, you either have to raise taxes elsewhere, find another source of revenue, or not do the tax cut.
Laura, we have a debate finally coming up between Harris and Trump on September 10th. What do we know so far about what to expect in terms of the nature of that discussion between the two candidates?
So both candidates are preparing for the debate, however, in very different ways right now. Harris is hunkered down in Pittsburgh, Pennsylvania. She's meeting with staff, having these closed-doors policy sessions. She'll be doing these mock debates with someone playing Trump. She's working with a lot of policy analysts who have helped previous presidential candidates into debate prep. Trump is doing none of that. He doesn't like to do these mock debates. Instead, he's just having conversations with his staff, sort of lightly discussing, what are the policy issues he wants to hit. And he views doing things like going out and doing rallies, the speech like he did yesterday at the Economic Club of New York, as rehearsing for the debate. So they're both, working on their messaging, but going into the debate, don't expect a lot of really detailed policy discussion. This is going to be much more about landing zingers, having a moment that can then be, clipped in 30 seconds and put and shared on social media. This is less about, how do we want to, address the debt? How do we want to address deficits? This is more about kind of having an overarching message that can resonate and get people out to vote.
Laura, just in 10 seconds, is this the only debate you think that they're going to have between the two candidates?
It's the only one that's scheduled. There is a vice presidential debate for October 1, but we'll see if there's another one added to the calendar.
Okay, we'll have to wait and see. Laura Davison, really appreciate you taking the time. Politics reporter at Bloomberg News, joining us from our Washington, D.C. bureau. Taking a look at the markets, about an hour and 10 minutes to go until the close of trading. We're off our lowest levels of the day. The S&P 500, though, still down more than 1.7%. The NASDAQ 100 right now down by 2.6%. Coming up, we're talking about a new addition to the Bloomberg Billionaires Index.
This is Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
It is Bloomberg Business Week. I'm Tim Stenevec, and that is Emily Griffeo. Okay, we're going to talk about the newest addition to the Bloomberg Billionaires Index. She's 32 years old. She rose to fame as a kid on the Disney Channel. She started a music career. She created her own beauty brand, and she's now starring in the Emmy-nominated Hulu show, Only Murders in the Building. In the process, she's built a fortune that's made her one of the country's youngest female self-made billionaires. We're talking about Selena Gomez, who I know from the Hulu show, and you said when we were chatting about this earlier, from Wizards of Waverly Place.
Yeah.
So you've known about her for years.
I've known her for years.
Yeah.
I feel like it's been my whole life. I've, watched her on TV. She's great.
She spent a lot of years building her businesses as well. Diana Lee writes all about it. She's Bloomberg News wealth reporter. She writes about the star who's now, for the first time ever, part of the Bloomberg Billionaires Index. She joins us here. Diana, that is, not Selena Gomez, in the Bloomberg Business Week studio. So a lot of people know her as from a star of screen, star of TV, star of streaming, and of course her pop music career. But in fact, it's something else that constitutes the vast majority of her wealth. Tell us how she built up this over $1 billion fortune.
Yeah, so it's a really fun story. We did a little bit of math on her net worth. She's estimated to be $1.3 billion, and that is, as you said, one of the richest self-made female billionaires in the country. And that's really impressive because Bloomberg previously did a story on Taylor Swift, which is a similar approach. By the way, she's also a good friend of Selena Gomez. So yeah, well, Taylor Swift got to billionaire index because mostly coming from music revenues. While in Selena's case, music is a really tiny portion of her net worth. You know, that she is a singer, she is an actress, she is an entrepreneur all at the same time. So she really got rich from these multiple different revenue streams that leverages her talent and obviously the massive social media following. So yeah, the majority is coming from this beauty brand, Rare Beauty, which is extremely popular among teenage girls. And obviously it was valued at $2 billion. And apart from that, she makes money from the revenue stream from album sales, music tours, acting, and streaming. And of course, she co-founded a mental health startup called Wondermind as well.
She's very busy. But
Exactly.
I really like that chart. 81.4% of her wealth comes from Rare Beauty. What exactly makes Rare Beauty different than other makeup brands? And I feel like every celebrity has a makeup brand. So why is this one so successful?
Yeah, definitely the bulk chunk of the wealth is coming from Rare Beauty, and Selena has pretty much kept this brand very independent. And I guess one of the secret sauce for the success is that she really leverages the social media following to promote the products. As you know, Selena is the most followed woman on Instagram, and obviously there's a lot of TikTok following for that as well. So she really leverages that to do the marketing for the product. And apart from that, there is this charity element as well, because Selena has been quite open about her struggles with bipolar disorder, and she pledges to donate 1% of all the Rare Beauty revenues into a charity fund that supports the mental health education. And that kind of like charity-based philosophy really resonates with her followers, so that supports her business as well.
These celebrity-backed businesses, as Emily was mentioning, there are a lot of celebrity-backed businesses. That's by no means a guarantee that there's going to be some huge exit here. As you pointed out in your story, there was some discussion that this could be sold at some point. It hasn't been.
Yeah.
But what are the risks having so much of a net worth tied up in a business that is still venture-backed at this point?
Yeah, so that's a really good point because we know that the valuation on beauty brands might be very transitory, and celebrity-backed business is definitely not a guarantee for a forever hit. We see that a lot of consumers might fickle, and a lot of these brands tied to famous people might be fizzling after a strong start. But in terms of Selena Gomez, I would say it's a very unique situation because she really managed to diversify her business into many other business streams that prepare her very well for later years, because you see we have seen this big transition over her career into something that is more authentic to her, that actually proves to be better investment decisions. And especially, you know, even though we haven't seen many music tours in the past few years, but we see she become more passionate about acting. And Only Murders in the Building is back on the screen. So yeah, obviously she keeps making money from all these branding revenue as well. So yeah, I think she's a really like good example for, you know, somebody who give a good example of how celebrities can manage their wealth into later years.
Very briefly, you did not hear back from Selena Gomez's team.
I haven't, unfortunately.
Diana Lee, Bloomberg News wealth reporter, writing about the star who for the first time ever is part of the Bloomberg Billionaires Index, Selena Gomez, on that index. Taking a look at the markets today, we're still seeing stocks lower off our worst levels of the day. The S&P 500 down 1.6%. The NASDAQ 100, though, down more than 2.5%. Emily, continuing to see the sell-off, especially when it comes to those big tech names and those chip companies.
Yep. That is really, 2.5% down on the NASDAQ. And those two-year yields down 10 basis points. People really hiding out in bonds and betting on a more dovish Federal Reserve.
Well, if you are sticking around on Bloomberg TV, coming up next is the close. That is going to do it for our hour on Bloomberg TV. But we're still coming at you from Bloomberg Business Week on Bloomberg Radio, Bloomberg Originals, and of course on YouTube. We got a great program coming up. We're talking campaign finance, we're talking sports betting, and of course, we're talking these markets. That's all next on Bloomberg Business Week.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
It is Bloomberg Business Week. We are 1 hour away from the close of trading on this Jobs Friday, September 6, 2024, live from the Bloomberg Interactive Brokers studio. We're streaming on YouTube and Bloomberg Originals. I'm Tim Stenevec. Emily Griffeo, Bloomberg News cross-asset reporter, in for Carol Masser. How are things looking cross-asset right now?
It's always a good day to be a cross-asset reporter when we have a bond market where yields are down in almost double-digit territory. We have stocks plunging. It is the worst week, or at least the S&P 500 is poised to have the worst week since March 2023 when we had a mini banking crisis.
Yeah, the regional bank crisis. Okay, we're going to have much more on the markets a little later in the program. We're also, speaking of money, talking campaign finance in terms of money raised, now that we've got a view of August's haul. And speaking of money, sports betting hitting at $220 billion has financial advisors on alert. We're talking about that story in just a few minutes. Plus, a look at the shipping industry with a really interesting guest, the CEO of Synergy, talking about how ports are becoming pawns when it comes to geopolitics. All that and more over the next 2 hours. First up, though, a check on the day's trade and top business stories. Here's Charlie Pellet.
All right, thank you very much, Tim and Emily. We've got just about 59 minutes to go before that closing bell clangs on Wall Street. Steep losses, not only on the day, but for the week. For the week right now, the S&P looking at a drop of 4.2%, right to today's numbers. S&P down 88 now at 54.14, a decline of 1.6%. We've got the Dow down 366, a drop of 0.9%, while NASDAQ is down 405, a drop now of 2.4%. Stocks on track for the worst weekly sell-off since March of 2023. Bonds whipsawed as another disappointing report on the U.S. labor market revived concerns that the economy is cooling and the Fed may be moving too slow to rescue it. 10-year, 3.70%. We've got the 2-year, 3.65%. Spot gold down $24 the ounce to $24.91, a decline of 1%, while West Texas Intermediate crude down 1.6%, 68.04 now on WTI. Former Treasury Secretary Larry Summers says while the August employment report was not particularly poor, it did make predicting the size of the Fed's likely interest rate cut this month a tougher call.
I think because of the weakness, it's looking like a closer call for 25 versus 50 in September than was my guess a month or two ago. I don't think it's ultimately very important.
Bloomberg contributor Larry Summers speaking with David Weston on Wall Street Week. You can hear the entire interview tonight, 6 o'clock Wall Street time. Mobileye shares are dropping today, down 8.1% after Bloomberg News reported that Intel is considering options for its stake in the automated driving systems provider. Intel lowers, well, Intel tumbling by 2.4%. Donald Trump has won a delay to his sentencing in the New York hush money criminal case until after the November 5th presidential election, giving the Republican nominee a reprieve from a potential prison term weeks before voters go to the polls. Recapping stocks lower, S&P down now by 1.6%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie Pellet. Well, Vice President Kamala Harris raised $361 million in August. It highlights how her ascent to the top of the ticket for the Democrats has energized Democratic donors and the base and upended the race with Republican Donald Trump. Harris had $404 million in the bank at the start of September, topping the $295 million that Trump reported for that same time period. For more, we go to Bill Allison, Bloomberg News campaign finance reporter. He talks money, he talks politics, and he joins us from Washington, D.C. So, Bill, what do we know about the record haul that we've seen from Harris just over the last 6 weeks?
So, since she became the nominee, she's raised a staggering $615 million. That's almost as much as Donald Trump had raised all the way through the end of July. So she's just had an incredible burst of support from Democratic donors. She had 3 million donors in the month of August. 1.3 million of them were new. And, she's definitely got momentum with the donor class.
Okay, I'm curious about what this means for her electoral prospects. Because,
well, I mean,
yeah, sorry, go ahead, Bill.
Yeah, I think that the key thing about the money is that obviously it's not just raising the big money. It's the fact that you can spend a lot more than your opponent. She has much more money in the bank. She can hit the battleground state airwaves. They've opened offices in all of these states. They've got 2,000 paid staffers spread out across the battleground states, coordinating all of these Get Out the Vote Act operations and voter contact operations. So they can build a much more massive machine to, basically persuade the public to vote for her.
In your article, you cite the campaign co-chairman, Jeffrey Katzenberg, who said that 95% of the contributions came from donors giving less than $200. This, of course, to Harris's campaign. How unusual is that?
Well, actually, it's less unusual than it seems. One of the reasons why, is basically we're counting the number of donations, not necessarily counting the amount of money that's coming in. And there are many more small dollar donors than there are big donors. So, but that being said, 95% is a pretty big number, and it's not unusual, or it's a good sign for the campaign that they have so many small dollar donors, because it does kind of track voter enthusiasm, and the fact that so many people are giving means that she has a lot of supporters, and those supporters are talking to other people, and so it could really help her campaign.
Is the enthusiasm short-lived in the sense that so much was raised in a very short period of time following Joe Biden leaving the top of the ticket? Or is there any indication that the momentum has continued?
Well, she still has, she's got events coming up. We talked to her campaign people, and Jeffrey Katzenberg, who was saying that, that there is no way that they're letting up. They're going to continue doing it. But that being said, we've seen in this, this crazy up and down campaign, Donald Trump had this amazing month of fundraising, and this after he was convicted in May. And, he blew the doors off of what raising what he did, what Joe Biden was doing. And that enthusiasm kind of went away. I mean, he raised $130 million in August, which is not a horrible figure, but it's nothing like the 310 million that he was raising when he was kind of, peaking against Biden. So yes, a bad debate performance, and given how crazy this campaign has been, any kind of black swan event could, put a damper on her fundraising. That remains to be seen, though, if that's going to happen.
We have about 2 months left to go, right? Almost exactly 2 months left to go.
Buckle in.
How critical are the next 2 months for campaign fundraising? And do we have any idea of just how much more money is going to be donated to both of these candidates?
I think you're going to see, especially in September, first half of October, a ton of money comes in, especially to super PACs. This is when big donors start writing those eight-figure checks, and you really start to see the super PACs ramping up. So yeah, we're going to see a lot more money, and and as the closer you get to election day, more people are donating, whether it's a small dollar donor or somebody writing a big check.
Bill, when you think about who's donating to Trump's campaign, does he have the same enthusiasm in terms of small money?
I think his figure was about 98% of his donors were giving less than $200. I think his average donation is $56. And again, it's just kind of a reflection of, that if you look at the percentage of the American people that give more than $200 to a campaign, it's a fraction of 1%. This is a very small pool of people. So, but the fact is that when they give money, and when you're writing, like, for example, a $929,600 check to the Biden Victory Fund, the Harris Victory Fund, that money goes a lot farther than, the person who's giving $10 or $15. So it's not surprising that, there are more small dollar donors than big dollar donors. But what's kind of worn off for Trump is that while the percentage is still good, they're just not donating as much as they were back in May and June.
Bill, what is really wild to me about all this money is how much is being spent on such a small number of people when it comes to the U.S. population. As we talk over and over again on our program, and as you guys do in Washington, D.C. with the Bloomberg News Morning Consult poll, it's basically tens of thousands of voters in 7 different swing states that are likely going to decide this election. I mean, it's kind of mind-boggling.
It really is how narrowly focused, the election, what it comes down to. And again, it doesn't really come down to the whole population of these states. It does come to these swing voters, undecided voters, persuadable voters. And that's really, at this point with, certainly with Donald Trump, who's very well known. Kamala Harris is not as well known, so she has a little bit more room to persuade people to catch on with voters. But yeah, it's a huge amount of money to spend. If you look at, Pennsylvania, I think there's $150 million booked through Labor Day just in television ads. That doesn't even include what's being spent to knock on doors and visit people and send out mailers and direct mail. So yeah, it's a vast fortune spent trying to persuade a narrow sliver of the population to pull the lever one way or the other.
All right, Bill, we got to leave it there, but please, we're going to have you back very, very soon because you follow the money. Bill Allison, Bloomberg News campaign finance reporter, joining us from Washington, D.C. This is Bloomberg. Well, as I was preparing for this story, our producer Elizabeth asked if I'd ever placed a bet on a sport. Have you, Emily?
I have not.
You have not?
I was technically under the athletic department in college, so there were a lot of strict rules around like what we could.
Yeah, but
and
I
could
think
not
now
do.
you're allowed. I have no idea actually. If
But
we're allowed to do
now I'm not really interested in that because there's some rules around Bloomberg journalists?
that. Oh, maybe I shouldn't tell people then what I found out from another colleague.
Maybe
I have no
I'm
idea.
overly cautious.
Yeah, I am too.
We were just talking about how all I buy is the S&P 500.
Well, that makes sense. I mean, we're allowed to buy index funds. That's like the only thing we can buy. Another colleague, though, who shall remain nameless, said that she placed a bet last night. Check out this bet that she did.
Oh.
She did a multi-leg same game parlay on last night's Ravens-Chiefs game. She put down a whopping 50 cents. It would have netted her a few $100s if she won.
Who was this?
I'm not going to tell
You're
you.
not
She
gonna
didn't
say.
win.
Okay.
She did not win, but 50 cents down the drain. That said, the proliferation of mobile betting apps like FanDuel and DraftKings, plus betting kiosks at stadiums across the country, have made it so that even small bets make for big business. The U.S. sports gambling industry has seen more than $220 billion wagered in the 5 years since the Supreme Court essentially legalized what was long an underground aspect of fandom. Claire Ballantyne is Bloomberg News personal finance reporter. She writes about how financial advisors are on high alert. She joins us from New York City. Claire, good to have you with us. What are financial advisors telling you about the $220 billion that's been wagered over the last 5 years? What are they seeing from their clients?
Well, they're telling me that they're really worried. Maybe not their clients in particular, but just about sort of the industry as a whole, where so many people can bet money so easily. We're seeing these mobile apps and usually it's young people, a lot are male, that are able to just sort of bet money at the touch of a button. And it's become such an intrinsic part of watching games that is just exploding and growing continuously.
Claire, you've written a lot about retail investors buying anything from crypto to meme stocks. How much of this trend now of these people using their maybe pandemic savings to bet is just another example of the fact that those savings still exist and that there is still some liquidity in the market here and a propensity to spend?
I think you're right that it's all kind of tied together. There's sort of been this gamification of trading and investing. It's fun, it's easy, it's quick and flashy, and people are able to sort of have this community around it. And I think it's the same thing with sports betting. It's taking this activity, watching sports that people love to do, and then combining it with the ability to sort of have some skin in the game and bet money on it. And I think it's a great question about how this, leads to questions about the consumer health and how much money people have to spend. I think it's a really interesting gauge into the average American consumer right now. And definitely we're seeing people still have the money to make some of these bets.
You talked to some folks who've been placing bets. What did you find in general about the people you spoke to who are actually spending money on these apps?
Yeah, what was really striking to me was just how these people are sort of justifying it to themselves. They're saying, oh, it's just $5 here and there. It's $5 for a game, it's $10 here. Feels like a really low amount of money, but then you sort of add that all together and you think about how many football games there are in the fall, and it starts to become kind of worrisome just to consider also the fact that most people lose their bets and they lose money. So it's pretty striking to me how the mentality is sort of around this and sort of the justifications of it.
The financial advisors you spoke to, what was the advice that they're giving to their clients? Did you speak to advisors who don't want anyone, betting, or I'm wondering if there's maybe a safer way to participate in sports gambling?
I think financial advisors would always rather their clients not gamble than gamble. But I think, it sort of relates to what a lot of advisors say about stock trading. It's like, okay, if you want to bet some money on, meme stocks, cool. Just make sure it's only a set amount, that you don't go over that amount, that you think of it as, fun money, discretionary spending, and not part of a long-term investment strategy. And I think it's the same here. I don't think anyone's saying you shouldn't sports bet at all, but it's just continually having that sort of check and making sure you're not going over your budget.
I'm certainly interested to keep following this and see, Emily, whether or not we're going to start to see pushback in the coming years. You always do hear when these products and services are advertised that, if you have a gambling addiction, call this number, and here are the resources that the state offers. So certainly interesting to see this take. Claire Ballantyne, Bloomberg News personal finance reporter, joining us from New York City. We do have about 45 minutes, a little less than 45 minutes to go until the markets close on this Friday, shortened trading week, but a jobs day. Taking a look at the S&P 500 off our lows of the day, but still down 1.5%. The NASDAQ composite right now down by 2.4%. As a reminder, the NASDAQ composite actually opened higher this morning, but has since been down about 2%. We're seeing shares of Broadcom down 9%, Tesla down 7%, Supermicro down 5.7%, and ASML down 5%.
I'm trying to look at what is green here on my launch pad on the Bloomberg terminal. The Bloomberg Dollar Spot Index is green, but only by less than 0.1%. But I guess you could see that as a safe haven trade, and really investors are just piling into bonds today.
There are 12 stocks in the NASDAQ 100 that are actually in the green today. One of those, Monster Beverage.
Huh.
Yeah, look at that.
Look at
PDD
that.
Holdings higher by 0.8%. Fastenal up by 1.4%.
I feel like Monster Beverages, that's something you would drink if you're going to then go gamble on sports on your phone.
Check out that story on the Bloomberg terminal. Coming up next, we're going to talk maritime shipping with the CEO of not one, but two shipping companies. That's next.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. We are looking at losses for the Dow, the S&P, and NASDAQ. Jobs Friday. Yes, we are off session lows, but still looking at a decline in the Dow of 324 points, down 0.8%. We got the S&P right now down 82, a decline of 1.5%, while NASDAQ is down 382 points, a drop now of 2.2%. 10-year yield, 3.71%, with a 2-year, 3.66%. Gold is down 0.9%, $24.94 the ounce, and West Texas Intermediate crude oil down 1.6%, $68.06 for a barrel of WTI. Well, the jobs report proved to be disappointing to a lot of investors today. Reaction to that report from Joni Biley, the chief workforce analyst at EmployBridge, who was interviewed this morning on Bloomberg Intelligence.
This report definitely proves we have a weakening job market. We've been saying that certainly for some time. We feel it in the temporary help industry. Our industry, the staffing and recruiting, of temporary workers has really been on a decline for about 2 years.
And you can hear more of that conversation on the Bloomberg Intelligence podcast. Download it wherever you get your podcasts. Apple's most important event of the year takes place Monday, when the company will roll out its latest iPhones and set the stage for a new artificial intelligence platform. Apple right now down 0.7%. And Bolero is rallying after the operator of bowling centers reported revenue for the fourth quarter that came in above the average analyst estimate on a down day for the rest of the market. We got shares of Bolero up by just about 8%. And briefly, Donald Trump has won a delay to his sentencing in the New York hush money criminal case until after the November 5th presidential election, giving the Republican nominee a reprieve from a potential prison term weeks before voters go to the polls. Recapping, S&P down 1.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Hey, thanks for that, Charlie. Do appreciate it. Well, our next guest has a great view of global commerce. He runs companies that have more than 24 ships in the ocean that transport at any given moment things like wheat, corn, steel, copper, oil, coal, and more all around the world. Stamatis Tsantanis